Question 1. John, a resident of Montana, is diagnosed with a critical illness. His health insurance policy includes a critical illness rider. According to Montana's insurance regulations, which of the following statements is most accurate regarding the payout of a critical illness rider benefit? A. The benefit amount is fixed and predetermined by the insurance company. B. The payout is based on a percentage of John's death benefit under the life insurance policy. C. The critical illness rider benefit is directly paid to the medical provider. D. The benefit is paid directly to John in a lump sum, and he can use the funds at his discretion. The correct answer is D. The benefit is paid directly to John in a lump sum, and he can use the funds at his discretion. Montana Administrative Rules Title 66, Chapter 2, Part 10, Arm 66.2.1001, outlines regulations for critical illness insurance. These regulations require critical illness riders to pay benefits directly to the insured individual, not the medical provider. The insured can then use these funds at their discretion to cover medical expenses, lost wages, or other needs arising from the critical illness. Question 2. Mary is a life insurance agent licensed in Montana. A client expresses interest in purchasing a universal life insurance policy. When explaining the features of a universal life policy, which of the following statements should Mary be most careful to avoid? A. Universal life insurance offers flexible premiums and death benefit options. B. The cash value component of a universal life policy can grow over time. C. Universal life insurance premiums may increase if the policyholder fails to pay sufficient premiums to maintain the death benefit. D. Universal life insurance is a good option for individuals seeking guaranteed lifetime benefits. The correct answer is D. Universal life insurance is a good option for individuals seeking guaranteed lifetime benefits. Universal life insurance is designed with flexibility in mind. Premiums and death benefits can be adjusted based on the policyholder's needs. However, Montana Code Annotated Section 3321201, MCA, requires insurers to disclose that premium payments may not be sufficient to maintain the desired death benefit if not paid according to the policy schedule. Unlike whole life insurance, universal life policies do not guarantee a fixed death benefit or cash value accumulation. Question 3. A Montana resident is considering purchasing a Medicare supplement policy, Medigap. According to Montana's Medigap regulations, which of the following statements is true regarding pre-existing condition exclusions? A. Medigap plans can deny coverage for pre-existing conditions if the applicant did not have prior health insurance. B. Medigap plans cannot exclude coverage for pre-existing conditions if the applicant had continuous creditable coverage. C. Pre-existing condition exclusions in Medigap plans only apply to the first 12 months of coverage. D. Medigap plans can impose lifetime limits on coverage for pre-existing conditions. The correct answer is B. Medigap plans cannot exclude coverage for pre-existing conditions if the applicant had continuous creditable coverage. The Health Insurance Portability and Accountability Act, HIPAA, prohibits Medigap plans from denying coverage or imposing pre-existing condition exclusions for applicants who have maintained continuous creditable health coverage. Montana adheres to these federal regulations as outlined in the Montana Medicare Supplement Insurance Minimum Standards Act, MCA Section 33211101 et seq. These are just a sample set of questions. Remember, the actual exam will likely have more questions and may cover a wider range of topics. Question 4. A Montana resident is replacing their existing health insurance policy with a new plan. According to Montana's guaranteed issuance rights for health insurance, which of the following statements is false? A. The individual has the right to guaranteed issuance, regardless of their health status, if they meet eligibility requirements during an open enrollment period. B. Guaranteed issuance rights only apply to individuals who have maintained continuous health insurance coverage. C. Insurers can impose a higher premium rate for guaranteed issuance policies compared to non-guaranteed policies. D. Montana residents can lose their guaranteed issuance rights if they allow their health insurance to lapse for more than 60 days. The correct answer is B. Guaranteed issuance rights only apply to individuals who have maintained continuous health insurance coverage. Montana's guaranteed issuance rights, as outlined in MCA Section 3321207, ensure that qualified individuals can obtain health insurance regardless of their health condition. These rights apply during open enrollment periods or under specific qualifying events such as job loss or loss of other coverage. While insurers may charge higher premiums for guaranteed issuance policies, they cannot deny coverage due to pre-existing conditions. Question 5. During the replacement process of a health insurance policy in Montana, an agent is required to provide the applicant with a replacement disclosure form. What is the primary purpose of this disclosure form according to Montana regulations? A. To obtain the applicant's signature on a document acknowledging receipt of the new policy. B. To highlight the potential benefits of the new policy compared to the existing one. C. To disclose key information about the new and existing health insurance plans to facilitate informed decision-making. D. To document the reason for replacing the existing health insurance policy. The correct answer is C. To disclose key information about the new and existing health insurance plans to facilitate informed decision-making. Montana Administrative Rule ARM 66.2.1101, 2, mandates the use of a replacement disclosure form when replacing a health insurance policy. This form serves to inform the applicant about critical details of both the new and existing plans, including benefits, exclusions, premiums, and potential consequences of replacing the current coverage. This disclosure empowers the applicant to make a well-informed choice based on a clear comparison of both options. Question 6. An agent is marketing accident insurance policies in Montana. According to Montana's accident insurance regulations, which of the following statements is not a required disclosure during the sales process? A. A clear explanation of the benefits covered under the accident insurance policy. B. A statement outlining the exclusions that apply to the policy's coverage. C. Information regarding the accidental death benefit amount and any limitations. D. A guarantee that the insured will receive full benefits regardless of the cause of the accident. The correct answer is D. A guarantee that the insured will receive full benefits regardless of the cause of the accident. Montana Administrative Code Title 66, Chapter 3, Part 1, ARM 66.3.101, establishes regulations for accident insurance. Agents are required to disclose essential information during the sales process, including benefits, exclusions, limitations, and claim procedures. However, accident insurance policies are not designed to provide guaranteed benefits regardless of the accident cause. The specific circumstances surrounding the accident will determine whether the policy provides coverage based on the defined terms and conditions. Question 7. A Montana resident is considering purchasing a long-term care insurance policy. According to Montana's regulations on long-term care insurance, which of the following statements is most accurate? A. Long-term care insurance policies cannot be canceled by the insurer after the policyholder reaches a certain age. B. Insurers are required to offer guaranteed renewal options for all long-term care insurance policies in Montana. C. Policyholders have the right to cancel their long-term care insurance policy within a specific grace period after purchase. D. Long-term care insurance benefits are exempt from state income taxation in Montana. The correct answer is C. Policyholders have the right to cancel their long-term care insurance policy within a specific grace period after purchase. Montana adheres to the National Association of Insurance Commissioners, NAIC, Model Long-Term Care Insurance Regulations. These regulations mandate a guaranteed right to cancel the policy within a specific time frame, typically 30 days, after receiving the policy. This allows policyholders to review the details and make an informed decision. However, guaranteed renewability is not mandatory for all long-term care policies. Cancellation by the insurer may be possible under certain circumstances outlined in the policy contract. Long-term care benefits may also be subject to state income taxation depending on specific situations. Question 8. An agent is explaining disability income insurance options to a client in Montana. Which of the following statements is not an accurate description of disability income insurance benefits in Montana? A. Benefits may be paid to replace a portion of the insured's income if they become disabled and unable to work. B. Montana law mandates a minimum benefit period for disability income insurance policies. C. The definition of disability can vary depending on the specific policy provisions. D. Premiums paid for disability income insurance are typically tax-deductible on the federal tax return. The correct answer is B. Montana law mandates a minimum benefit period for disability income insurance policies. Disability income insurance policies offer financial protection by replacing a portion of the insured's income if they are disabled and unable to work. The definition of disability and the benefit period can vary depending on the specific policy terms. Montana does not have a mandated minimum benefit period for disability income insurance. However, federal tax regulations generally allow for the deduction of disability insurance premiums paid on certain qualified plans. Question 9. A life insurance policyholder in Montana is considering a viatical settlement. According to Montana's viatical settlement regulations, which of the following statements is true? A. Viatical settlements are prohibited in Montana. B. Viatical settlement providers must be licensed by the Montana Commissioner of Securities and Insurance. C. The terminally ill policyholder has complete control over how the viatical settlement proceeds are used. D. There are no restrictions on the fees charged by viatical settlement providers in Montana. The correct answer is B. Viatical settlement providers must be licensed by the Montana Commissioner of Securities and Insurance. Montana allows viatical settlements, which involve selling a life insurance policy to a viatical settlement provider at a discounted rate in exchange for a lump sum payment. Montana Code Annotated Section 3321212 requires viatical settlement providers to be licensed by the Montana Commissioner of Securities and Insurance. This ensures consumer protection and fair business practices. While the terminally ill policyholder has significant control over how the proceeds are used, there may be limitations outlined in the viatical settlement agreement. Additionally, Montana regulates the fees charged by viatical settlement providers to prevent excessive costs. Question 10. A health insurance agent in Montana is contacted by a client who wants to add their adult child to their existing health insurance plan. According to Montana's dependent coverage mandates, which of the following statements is true regarding eligible dependents? A. An adult child can only be added to a parent's health insurance plan if they are financially dependent on the parent. B. Montana law allows adult children up to any age to remain on a parent's health insurance plan. C. There is no requirement for an adult child to be unmarried to qualify as a dependent on a parent's health insurance plan in Montana. D. Adult children with pre-existing conditions can be excluded from coverage under a parent's health plan in Montana. The correct answer is C. There is no requirement for an adult child to be unmarried to qualify as a dependent on a parent's health insurance plan in Montana. Montana adheres to the federal health care reform law's dependent coverage provisions. The Affordable Care Act mandates that qualified adult children can remain on a parent's health insurance plan until they turn 26 years old, regardless of marital status or financial dependence. Montana cannot impose stricter eligibility requirements for adult child dependents on health insurance plans. Additionally, pre-existing condition exclusions for dependents are prohibited under the ACA. Question 11. An agent is explaining Medicare Advantage plans, Part C, to a potential client in Montana. Which of the following statements is not an accurate description of Medicare Advantage plans? A. Medicare Advantage plans are offered by private insurance companies approved by Medicare. B. These plans may offer additional benefits beyond what traditional Medicare, Parts A and B, covers, such as vision or dental care. C. Enrollment in a Medicare Advantage plan typically replaces traditional Medicare coverage. D. Beneficiaries can choose to disenroll from a Medicare Advantage plan and return to traditional Medicare during specific enrollment periods. The correct answer is A. Medicare Advantage plans are offered by private insurance companies approved by Medicare. Medicare Advantage plans are offered by private insurance companies contracted with Medicare, not directly approved by the program itself. These plans provide an alternative way to receive Medicare benefits, often with additional coverage options. Enrolling in a Medicare Advantage plan replaces traditional Medicare, Parts A and B, coverage for most services. However, beneficiaries have the right to disenroll from a Medicare Advantage plan during designated open enrollment periods and return to traditional Medicare. Question 12. A life insurance applicant in Montana is concerned about the privacy of their medical information collected during the application process. According to the Montana Insurance Privacy of Information Act, which of the following statements is true? A. Insurers are not required to obtain the applicant's written authorization before collecting and using their medical information. B. Applicants have the right to access and correct any inaccuracies in their medical information held by insurers. C. Insurers can share an applicant's medical information with any third party without their consent. D. Montana's privacy law only applies to health insurance and does not cover life insurance applications. The correct answer is B. Applicants have the right to access and correct any inaccuracies in their medical information held by insurers. The Montana Insurance Privacy of Information Act, MCA Section 3315101 et seq., regulates the collection, use, and disclosure of personal information by insurance companies, including medical information obtained during life insurance applications. Applicants have the right to access and correct inaccuracies in their medical information held by insurers. However, insurers generally require written authorization before using or disclosing this information for specific purposes beyond underwriting the life insurance policy. Montana's privacy law applies to all types of insurance, including life and health insurance. Question 13. A Montana resident is considering purchasing a cancer insurance policy. According to Montana's regulations on accident and health insurance, which of the following statements is least accurate regarding cancer insurance? A. Cancer insurance policies are considered a form of accident and health insurance and are subject to Montana's regulations. B. These policies typically provide a lump sum payment or benefit upon diagnosis of a covered cancer condition. C. Premiums for cancer insurance policies may vary depending on the insured's age, health history, and chosen coverage amount. D. Cancer insurance benefits are generally exempt from state income taxation in Montana. The correct answer is D. Cancer insurance benefits are generally exempt from state income taxation in Montana. Cancer insurance falls under the umbrella of accident and health insurance and is subject to Montana's insurance regulations outlined in Title 66 of the Montana Administrative Code. These policies typically pay a lump sum benefit or provide specific coverage for expenses related to cancer diagnosis and treatment. Premiums are determined by various factors, including age, health, and desired coverage. However, cancer insurance benefits are typically treated as taxable income by the state of Montana. You can consult the Montana Department of Revenue for specific tax regulations. Question 14. An agent is explaining individual health insurance plans to a client in Montana. When discussing pre-existing condition exclusions, which of the following statements is most accurate? A. Montana allows health insurance companies to deny coverage or impose rating restrictions based solely on pre-existing conditions. B. Individuals with pre-existing conditions can qualify for guaranteed issuance of health insurance plans during open enrollment periods. C. Insurers can impose waiting periods before coverage takes effect for pre-existing conditions in Montana. D. There are no restrictions on how health insurance companies can handle pre-existing conditions under Montana law. The correct answer is B. Individuals with pre-existing conditions can qualify for guaranteed issuance of health insurance plans during open enrollment periods. The Affordable Care Act, ACA, prohibits health insurance companies from denying coverage or charging higher premiums based solely on pre-existing conditions. Montana adheres to these federal regulations. Individuals with pre-existing conditions can qualify for guaranteed issuance of health insurance plans during open enrollment periods or under specific qualifying events like job loss. While waiting periods for coverage may exist in some plans, these typically apply to all benefits, not just pre-existing conditions. Question 15. An agent is contacted by a client in Montana who wants to cancel their health insurance policy mid-term. According to Montana's regulations on health insurance cancellation, which of the following statements is true? A. Insurers can generally cancel an individual's health insurance policy at any time without justification. B. Policyholders have the right to cancel their health insurance plan at any time, but may be subject to termination fees. C. Montana law allows for health insurance cancellation only under specific circumstances, such as non-payment of premiums or misrepresentation on the application. D. Insurers are required to offer a full refund of premiums paid if a policyholder cancels their health insurance mid-term in Montana. The correct answer is C. Montana law allows for health insurance cancellation only under specific circumstances, such as non-payment of premiums or misrepresentation on the application. Montana follows the federal health insurance cancellation and renewal regulations outlined in the ACA. Generally, insurers cannot cancel an individual health insurance policy mid-term except for specific reasons such as non-payment of premiums, fraud, or material misrepresentation on the application. Policyholders have the right to cancel their plan at any time, but may be subject to prorated premium charges and may not receive a full refund depending on the specific plan provisions. Question 16. A Montana resident is considering purchasing a long-term care insurance partnership, Lieutenant Colonel Partnership, policy. According to Montana's regulations on Lieutenant Colonel partnerships, which of the following statements is true? A. Lieutenant Colonel partnership policies offer tax-advantaged benefits for qualified long-term care expenses, but do not provide any life insurance component. B. These policies are regulated solely by the federal government and are exempt from Montana's insurance regulations. C. Insurers are not required to offer a death benefit option with Lieutenant Colonel partnership policies in Montana. D. Qualification for Medicaid benefits can be negatively impacted by owning an LTC partnership policy. The correct answer is A. Lieutenant Colonel partnership policies offer tax-advantaged benefits for qualified long-term care expenses, but do not provide any life insurance component. LTC partnership policies are a hybrid product combining long-term care insurance with asset protection benefits. They offer tax advantages for qualified long-term care expenses under specific federal tax code provisions. However, unlike some traditional long-term care policies, Lieutenant Colonel partnerships generally do not include a life insurance component. These policies are regulated by both federal and state authorities. Montana's insurance regulations ensure consumer protection and outline specific requirements for Lieutenant Colonel partnership policies sold within the state. While some Lieutenant Colonel partnership policies may offer a death benefit option, it is not mandatory. However, owning an LTC partnership policy may affect eligibility for certain needs-based government programs like Medicaid, depending on the specific circumstances and asset limits. Question 17. An agent is presenting Medicare Supplement, Medigap, plans to a potential client in Montana. When discussing standardized Medigap plans, which of the following statements is accurate? A. Standardized Medigap plans are offered by the federal government and have identical benefits nationwide. B. These plans are designed to supplement traditional Medicare, Parts A and B, by covering out-of-pocket costs such as deductibles and coinsurance. C. Montana mandates that all Medigap insurers offer every standardized Medigap plan option to consumers. D. Standardized Medigap plans are automatically renewed by the insurer each year, regardless of the policyholder's age or health status. The correct answer is B. These plans are designed to supplement traditional Medicare, Parts A and B, by covering out-of-pocket costs such as deductibles and coinsurance. Standardized Medigap plans are a set of federally regulated Medigap policies with standardized benefits. These plans help bridge the gap in coverage by paying for out-of-pocket expenses associated with traditional Medicare, such as deductibles, coinsurance, and copayments. While standardized nationwide, Medigap plans are offered by private insurance companies, not the federal government. Montana does not require insurers to offer every standardized Medigap plan option. However, insurers offering Medigap plans in Montana must comply with standardized benefit requirements for each plan they choose to sell. Medigap plans are not guaranteed to renew automatically, and insurers can cancel coverage under specific circumstances outlined in the policy contract. Question 18. A life insurance agent is working with a client in Montana who is interested in increasing their existing life insurance coverage. According to Montana's insurance replacement regulations, which of the following statements is most accurate regarding replacement of life insurance policies? A. There are no disclosure requirements for agents replacing life insurance policies in Montana. B. Replacement is generally discouraged, but there are no mandatory disclosure or waiting period requirements in Montana. C. Insurers are prohibited from issuing a new life insurance policy until the existing policy has been lapsed or surrendered. D. Montana regulations require a replacement disclosure form outlining key information about both the new and existing policies before replacing coverage. The correct answer is D. Montana regulations require a replacement disclosure form outlining key information about both the new and existing policies before replacing coverage. Montana adheres to the National Association of Insurance Commissioners, NAIC, Model Life Insurance Replacement Regulation. This regulation aims to ensure informed decision-making for consumers considering replacing their existing life insurance policy. A key component is the replacement disclosure form. This form requires agents to disclose critical information about both the new and existing policies, including benefits, exclusions, premiums, and potential consequences of replacing the current coverage. While replacement is not discouraged, consumers should have a clear understanding of the potential implications before making a decision. There is no mandatory waiting period, but insurers may have their own internal replacement guidelines. Question 19. A Montana resident is nearing retirement and is considering an annuity product. According to Montana's regulations on annuities, which of the following statements is false? A. Annuities are insurance contracts designed to convert a lump sum payment into a stream of income payments over time. B. Montana requires annuity providers to be licensed with the Montana Commissioner of Securities and Insurance. C. There are different types of annuities available, each with varying features and payout options. D. An annuity's death benefit typically pays the remaining account value to the beneficiary upon the annuitant's death. The correct answer is D. An annuity's death benefit typically pays the remaining account value to the beneficiary upon the annuitant's death. Annuities are insurance or investment vehicles that convert a lump sum payment into a stream of income payments over time. Montana, like most states, requires annuity providers to be licensed with the Montana Commissioner of Securities and Insurance to ensure consumer protection. There are various annuity types, including fixed annuities, variable annuities, and immediate or deferred annuities, each with distinct features and payout options. However, the death benefit in most annuities is not simply the remaining account value. Some annuities may offer a guaranteed minimum death benefit, which pays a set amount to the beneficiary regardless of the account value at death. Other annuities may offer a return of premium death benefit, ensuring the beneficiary receives at least the original premium paid if the annuitant dies before receiving all the benefits. Question 20. An agent is explaining critical illness insurance to a client in Montana. When discussing benefits, which of the following statements is not an accurate description of critical illness insurance? A. These policies typically pay a lump sum benefit upon diagnosis of a covered critical illness, such as cancer or heart attack. B. The benefit payout can be used for various purposes, including medical expenses, lost wages, or other needs arising from the critical illness. C. Critical illness insurance premiums are typically guaranteed to remain level throughout the policy term. D. Montana law mandates specific illnesses that critical illness insurance policies must cover. The correct answer is C. Critical illness insurance premiums are typically guaranteed to remain level throughout the policy term. Critical illness insurance provides a financial safety net in case of a severe illness. These policies typically pay a lump sum benefit upon diagnosis of a covered critical illness, as defined in the policy contract. The benefit can be used at the policyholder's discretion for medical bills, lost income, or other expenses related to the illness. However, critical illness insurance premiums are not guaranteed to remain level throughout the policy term. Premiums may increase based on the policyholder's age and other factors as outlined in the contract. Montana does not dictate the specific illnesses covered by critical illness insurance. Insurers design their own benefit lists, but these should be clearly defined in the policy. Question 21. An agent is contacted by a client in Montana who has received a solicitation for a hospital indemnity insurance plan. According to Montana's regulations on accident and health insurance, which of the following statements is true regarding hospital indemnity insurance? A. Hospital indemnity insurance is a form of accident and health insurance subject to Montana's regulations. B. These plans typically pay a fixed daily benefit for each day the insured is hospitalized, regardless of actual medical expenses. C. Montana law prohibits the sale of hospital indemnity insurance plans as they are considered duplicative coverage. D. Hospital indemnity benefits are exempt from state income taxation in Montana. The correct answer is A. Hospital indemnity insurance is a form of accident and health insurance subject to Montana's regulations. Hospital indemnity insurance falls under the umbrella of accident and health insurance and is subject to Montana's insurance regulations outlined in Title 66 of the Montana Administrative Code. These plans are designed to supplement other health insurance coverage by providing a fixed daily benefit for each day the insured is hospitalized. The benefit is paid regardless of actual medical expenses incurred. Montana does not prohibit the sale of hospital indemnity insurance. These plans can offer valuable financial assistance for out-of-pocket hospital costs not covered by primary health insurance. However, hospital indemnity benefits may be taxable income in Montana. You can consult the Montana Department of Revenue for specific tax regulations. Question 22. An agent is working with a young adult client in Montana who is considering purchasing a disability income insurance policy. When discussing benefit options, which of the following statements is least accurate regarding disability income insurance in Montana? A. Benefit payments may be based on a percentage of the insured's pre-disability income. B. Montana mandates a specific minimum benefit amount for all disability income insurance policies. C. The policy may define disability based on one's ability to perform their own occupation or any occupation. D. There may be a waiting period before benefits begin after a qualifying disability. The correct answer is B. Montana mandates a specific minimum benefit amount for all disability income insurance policies. Disability income insurance replaces a portion of the insured's income if they become disabled and unable to work. The benefit amount is typically a percentage of pre-disability earnings, as outlined in the policy contract. Montana does not require a minimum benefit amount for disability income insurance policies. These policies offer flexibility in defining disability. Some plans define disability based on one's ability to perform their own occupation, while others use a broader definition of any occupation. There is often a waiting period before benefits commence after a qualifying disability, allowing time for recovery or short-term disability benefits to be exhausted. Question 23. A health insurance company in Montana is developing a new short-term health insurance plan. According to Montana's regulations on short-term health insurance, which of the following statements is true? A. Short-term health insurance plans can offer coverage for a maximum period of 3 years in Montana. B. These plans are intended to be comprehensive health insurance and must cover all essential health benefits mandated by federal law. C. Montana allows short-term health insurance plans to exclude pre-existing conditions from coverage. D. Insurers are required to offer short-term health insurance plans to all applicants in Montana. The correct answer is C. Montana allows short-term health insurance plans to exclude pre-existing conditions from coverage. Short-term health insurance plans are intended to provide temporary health coverage, typically lasting for a limited period of time. Federal regulations generally limit the maximum duration of short-term health insurance to 364 days, and Montana may have even stricter limitations. These plans are not comprehensive health insurance and are not required to cover all essential health benefits mandated by the Affordable Care Act, ACA. However, Montana allows short-term health insurance plans to exclude pre-existing conditions from coverage. This is a major distinction from comprehensive health insurance plans. Insurers are not obligated to offer short-term health insurance plans in Montana. Question 24. An agent is explaining Medicare Part D, prescription drug coverage, to a client in Montana. Which of the following statements is not an accurate description of Medicare Part D? A. Part D plans are offered by private insurance companies approved by Medicare. B. Enrollment in a Part D plan is optional, but beneficiaries without creditable prescription drug coverage may face a penalty. C. These plans typically have formularies that list covered medications and may require tiered copays or coinsurance for prescriptions. D. Benefits under a Medicare Part D plan are standardized nationwide. The correct answer is D. Benefits under a Medicare Part D plan are standardized nationwide. Medicare Part D refers to the prescription drug coverage program offered by Medicare. These plans are sponsored by private insurance companies that contract with Medicare and are subject to federal oversight. Enrollment in a Part D plan is optional, but beneficiaries who go a certain period without creditable prescription drug coverage, either through a Part D plan or another qualified plan, may face a late enrollment penalty. Part D plans have formularies that list covered medications and may require tiered copays or coinsurance depending on the specific drug and plan design. However, benefits under Medicare Part D plans are not standardized nationwide. Plan costs, formularies, and benefit structures can vary depending on the specific plan chosen by the beneficiary in their local area. Question 25. A life insurance agent is contacted by a potential client in Montana who wants to purchase a variable universal life insurance policy. When discussing investment risk, which of the following statements is most accurate regarding variable universal life insurance? A. Variable universal life insurance policies offer guaranteed death benefits and fixed premiums. B. The cash value component of these policies grows based on the performance of underlying investments chosen by the policyholder. C. Montana law prohibits the sale of variable universal life insurance due to the investment risk involved. D. Unlike traditional whole life insurance, variable universal life policies do not participate in the company's profits. The correct answer is B. The cash value component of these policies grows based on the performance of underlying investments chosen by the policyholder. Variable universal life insurance, VUL, combines features of traditional life insurance with investment flexibility. VUL policies offer a death benefit and accumulate a cash value component. However, unlike whole life insurance, the cash value in VUL grows based on the performance of underlying investment options chosen by the policyholder. This introduces investment risk, as the cash value can fluctuate depending on market conditions. Montana allows the sale of VUL policies, but agents must disclose the inherent risks associated with these investment-linked products. Premiums in VUL policies may be flexible, and VUL policies may participate in the company's profits, but this is not guaranteed and depends on the specific policy design. Question 26. An accident insurance agent in Montana is explaining benefits to a client. According to Montana's regulations on accident insurance, which of the following statements is false? A. Accident insurance policies typically pay a benefit in case of accidental death or dismemberment. B. These benefits are often paid in addition to any other health insurance coverage the insured may have. C. Montana mandates that accident insurance policies cover all accidental injuries. D. Accident insurance premiums are not regulated by Montana and can vary depending on the insurer and coverage options. The correct answer is C. Montana mandates that accident insurance policies cover all accidental injuries. Accident insurance policies provide financial protection in case of accidental injuries or death. These benefits are typically paid in addition to any other health insurance coverage the insured may have, helping to cover expenses not covered by primary health insurance or lost income due to the accident. Montana regulates accident insurance policies to ensure consumer protection. However, Montana does not mandate that accident insurance policies cover all accidental injuries. The specific covered events and exclusions are outlined in the policy contract. Accident insurance premiums are not guaranteed and can vary depending on the insurer, the insured's age, health, risk factors, and the chosen coverage amount. Question 27. A consumer in Montana is considering applying for long-term care insurance. According to Montana's regulations on long-term care insurance, which of the following statements is true regarding insurability requirements? A. Montana prohibits health insurers from denying long-term care insurance applications based solely on health status. B. Insurers can generally deny or offer a policy with higher premiums based on the applicant's age and health condition. C. There is a mandatory waiting period in Montana before long-term care insurance benefits can be used. D. Long-term care insurance benefits are not subject to state income taxation in Montana. The correct answer is B. Insurers can generally deny or offer a policy with higher premiums based on the applicant's age and health condition. Montana follows federal regulations that allow insurers to consider an applicant's health status when underwriting long-term care insurance applications. This means they can deny coverage, offer a policy with a higher premium, or offer a limited benefit policy based on the applicant's age and health condition. There is no mandatory waiting period in Montana before long-term care insurance benefits can be used, but the specific waiting period may be outlined in the policy contract. Long-term care insurance benefits may be taxable income in Montana. You can consult the Montana Department of Revenue for specific tax regulations. Question 28. An agent is working with a client in Montana who is interested in purchasing a guaranteed renewable health insurance policy. When discussing renewal provisions, which of the following statements is true regarding guaranteed renewable health insurance in Montana? A. These policies guarantee lifetime coverage as long as premiums are paid, even if the policyholder develops health conditions. B. Montana mandates that all health insurance plans offered in the state must be guaranteed renewable. C. Insurers are allowed to increase premiums for guaranteed renewable policies, but cannot cancel coverage due to health status. D. Guaranteed renewable health insurance can be discontinued by the insurer if the policyholder makes too many claims. The correct answer is C. Insurers are allowed to increase premiums for guaranteed renewable policies, but cannot cancel coverage due to health status. Guaranteed renewable health insurance policies offer peace of mind regarding coverage renewal. As long as premiums are paid on time, the insurer cannot cancel the policy or refuse to renew it due to the policyholder's health status or claims history. However, these policies do not guarantee lifetime coverage at the same premium rate. Insurers are allowed to adjust premiums for guaranteed renewable plans based on factors like age, claims experience, and overall healthcare costs. Montana does not require all health insurance plans to be guaranteed renewable. Question 29. A health insurance company in Montana is developing a new health maintenance organization, HMO, plan. According to Montana's regulations on HMOs, which of the following statements is accurate? A. HMO plans require referrals from a primary care physician, PCP, to see specialists within the HMO network. B. These plans typically offer a broad network of healthcare providers that policyholders can access. C. Montana prohibits the sale of HMO plans as they limit consumer choice in selecting healthcare providers. D. HMOs are not subject to Montana's insurance regulations because they are not considered health insurance. The correct answer is A. HMO plans require referrals from a primary care physician, PCP, to see specialists within the HMO network. Health maintenance organizations, HMOs, are a type of managed care health insurance plan that emphasizes preventive care and coordination of services. HMO plans typically require referrals from a primary care physician, PCP, to see specialists within the HMO network. This approach aims to control costs and ensure patients receive coordinated care. Montana allows the sale of HMO plans. In fact, HMOs are subject to Montana's insurance regulations to ensure consumer protection and financial solvency. While HMOs may limit choice in selecting providers outside the network, they generally offer a comprehensive network of healthcare providers within the plan. Question 30. An agent is explaining critical illness insurance riders to a client in Montana. Which of the following statements is not an accurate description of critical illness riders? A. Critical illness riders can be added to existing life insurance policies to provide an additional benefit upon diagnosis of a covered critical illness. B. The benefit payout from a critical illness rider can be used for various purposes, including medical bills, lost wages, or other needs arising from the critical illness. C. Premiums for critical illness riders are typically fixed throughout the policy term. D. Riders may have specific waiting periods before benefits are payable after a qualifying critical illness diagnosis. The correct answer is C. Premiums for critical illness riders are typically fixed throughout the policy term. Critical illness riders are optional add-ons that can be attached to certain life insurance policies. These riders provide an additional benefit payout upon diagnosis of a covered critical illness, as defined in the rider. The benefit can be used at the policyholder's discretion for various expenses related to the critical illness. However, premiums for critical illness riders are not guaranteed to remain fixed throughout the policy term. Premiums may increase based on the policyholder's age and other factors as outlined in the rider. Critical illness riders may also have specific waiting periods before benefits are payable after a qualifying critical illness diagnosis. Question 31. A Montana resident is considering a Medicare supplement, Medigap, plan to help cover out-of-pocket expenses under Medicare. According to Montana's regulations on Medigap plans, which of the following statements is false? A. Medigap plans are standardized by the federal government and offered by private insurance companies in Montana. B. These plans are categorized by different lettered plans, Plan A, Plan B, etc., with standardized benefits for each plan type. C. Insurers can deny coverage for a Medigap plan based on the applicant's health status in Montana. D. Residents can enroll in a Medigap plan during a specific enrollment window, even if they are not currently enrolled in a Medicare Advantage plan. The correct answer is C. Insurers can deny coverage for a Medigap plan based on the applicant's health status in Montana. Medicare Supplement, Medigap, plans are standardized by the federal government to offer predictable benefits across different insurance companies. These plans are sold by private insurance companies licensed in Montana and categorized by lettered plans, Plan A, Plan B, etc., with standardized benefits for each plan type. However, Montana adheres to federal regulations that prohibit insurers from denying or charging higher premiums for Medigap plans based solely on an applicant's health status. There is a specific enrollment window for Medigap plans, called the Medigap Open Enrollment Period, which allows residents to enroll in a Medigap plan regardless of whether they are currently enrolled in a Medicare Advantage plan. Question 32. An agent is working with a client in Montana who wants to cancel their disability income insurance policy. According to Montana's regulations on accident and health insurance, which of the following statements is true regarding cancellation of disability income insurance? A. Both the policyholder and the insurer can cancel a disability income insurance policy at any time for any reason. B. Montana mandates a specific grace period during which the policyholder can cancel the policy for a full refund of premiums. C. Insurers generally require written notification from the policyholder to cancel a disability income insurance policy. D. Cancellation of a disability income insurance policy may affect the policyholder's eligibility for future coverage. The correct answer is C. Insurers generally require written notification from the policyholder to cancel a disability income insurance policy. Cancellation provisions for disability income insurance policies are outlined in the contract. While both the policyholder and the insurer may have the right to cancel under certain circumstances, it's not always at any time or for any reason. Montana does not mandate a specific grace period for cancellation with a full refund. However, insurers typically require written notification from the policyholder to initiate the cancellation process. Canceling a disability income policy may affect the policyholder's eligibility for future coverage, especially if health conditions have changed since the original policy was issued. Question 33. A consumer in Montana is interested in purchasing a short-term health insurance plan. When discussing limitations, which of the following statements is most accurate regarding short-term health insurance in Montana? A. Short-term health insurance plans typically offer comprehensive coverage similar to traditional health insurance plans. B. Montana regulations allow short-term health insurance plans to be renewed indefinitely. C. These plans may have exclusions for pre-existing conditions and may not cover all essential health benefits. D. Short-term health insurance premiums are heavily regulated by Montana and cannot exceed a set amount. The correct answer is C. These plans may have exclusions for pre-existing conditions and may not cover all essential health benefits. Short-term health insurance plans are intended to provide temporary health coverage, typically lasting for a limited period of time with federal limitations generally set at 364 days. Montana may have even stricter limitations on the duration of short-term health insurance coverage. These plans are not comprehensive health insurance and are not designed to replace traditional health plans. Short-term health insurance plans may exclude pre-existing conditions and may not cover all essential health benefits mandated by the Affordable Care Act, ACA. Premiums for short-term health insurance plans are not heavily regulated in Montana, and insurers can set their own rates based on the plan details and the applicant's risk profile. Question 34. An agent is meeting with a client in Montana who is considering purchasing a cancer insurance policy. According to Montana's regulations on accident and health insurance, which of the following statements is accurate regarding replacement of existing health insurance with cancer insurance? A. Cancer insurance plans can be used as a substitute for comprehensive health insurance coverage in Montana. B. These policies typically provide a lump sum benefit upon diagnosis, but do not cover ongoing cancer treatment costs. C. Insurers are prohibited from selling cancer insurance to individuals who already have health insurance in Montana. D. Replacing a health insurance plan with cancer insurance alone may not meet minimum health coverage requirements in Montana. The correct answer is D. replacing a health insurance plan with cancer insurance alone may not meet minimum health coverage requirements in Montana. Cancer insurance is a type of accident and health insurance that provides a financial safety net upon a cancer diagnosis. These policies typically pay a lump sum benefit upon diagnosis of a covered cancer condition, but may not cover the ongoing costs of treatment. Cancer insurance is not a substitute for comprehensive health insurance. Montana does not prohibit the sale of cancer insurance to individuals who already have health insurance. However, replacing a health insurance plan with only cancer insurance may not meet the minimum health coverage requirements mandated by Montana or the federal government. Question 35. A health insurance company in Montana is developing a new Preferred Provider Organization (PPO) plan. According to Montana's regulations on PPOs, which of the following statements is true? A. PPO plans offer the greatest flexibility in choosing healthcare providers, but may come with higher out-of-network costs. B. These plans require referrals from a primary care physician, PCP, to see specialists within the PPO network. C. Montana prohibits the sale of PPO plans because they create a two-tiered healthcare system. D. PPOs are not subject to Montana's insurance regulations because they are not considered health insurance. The correct answer is A. PPO plans offer the greatest flexibility in choosing healthcare providers, but may come with higher out-of-network costs. Preferred Provider Organization (PPO) plans offer a balance between flexibility and cost-effectiveness. PPO plans allow policyholders to use in-network providers for lower out-of-pocket costs and coverage benefits, but also offer the option to visit out-of-network providers, though typically with higher costs. PPO plans typically do not require referrals from a primary care physician, PCP, to see specialists, unlike HMO plans. Montana allows the sale of PPO plans. In fact, PPOs are subject to Montana's insurance regulations to ensure consumer protection and financial solvency. Question 36. An agent is explaining long-term care insurance benefits to a client in Montana. When discussing eligibility for benefits, which of the following statements is false? A. Long-term care insurance benefits typically pay for assistance with activities of daily living, ADLs, such as bathing, dressing, and eating. B. Cognitive impairment, such as Alzheimer's disease, may qualify an individual for benefits under a long-term care insurance policy. C. Benefits are typically paid regardless of the cause of needing long-term care, such as illness, disability, or age-related decline. D. Long-term care insurance policies may require a physician's certification of need before benefits are payable. The correct answer is C. Benefits are typically paid regardless of the cause of needing long-term care, such as illness, disability, or age-related decline. Long-term care insurance helps cover the costs of custodial care services when an individual can no longer perform activities of daily living, ADLs, without assistance. These ADLs include tasks like bathing, dressing, eating, toileting, and transferring. Long-term care benefits may also be triggered by cognitive impairment, such as Alzheimer's disease or dementia, that requires a similar level of care. However, long-term care insurance benefits typically have limitations and may not pay for all long-term care needs. In some cases, there may be exclusions for specific causes of needing care, or the policy may only cover care necessitated by illness or disability, not age-related decline. Additionally, long-term care insurance policies may require a physician's certification of need, documenting the level of care required, before benefits are payable. Question 37. An agent is working with a young adult client in Montana who is interested in critical illness insurance. When discussing policy details, which of the following statements is least accurate regarding critical illness insurance in Montana? A. Critical illness insurance policies may have graded benefit payouts, with a higher payout for diagnosis at a younger age. B. These plans typically define covered critical illnesses in the policy contract, and some may offer riders for additional illnesses. C. Montana mandates a specific payout amount for each covered critical illness under a critical illness insurance policy. D. There may be a survival period requirement, meaning the insured must survive for a set period after diagnosis to be eligible for benefits. The correct answer is C. Montana mandates a specific payout amount for each covered critical illness under a critical illness insurance policy. Critical illness insurance provides a financial safety net upon diagnosis of a severe illness. These policies typically define covered critical illnesses in the policy contract, such as cancer, heart attack, or stroke. Some plans may offer optional riders to cover additional critical illnesses. Critical illness insurance benefits may be graded, meaning the payout amount is based on the severity of the illness or the age of the insured at diagnosis. For example, a higher payout might be offered for an early-stage cancer diagnosis compared to a late-stage diagnosis. Montana does not mandate a specific payout amount for each covered illness. There may also be a survival period requirement, typically 30 days or longer, meaning the insured must survive for a set period after diagnosis to be eligible for benefits. Question 38. A consumer in Montana is considering applying for an individual health insurance policy. According to Montana's regulations on individual health insurance, which of the following statements is false? A. Insurers can deny coverage for individual health insurance applications based on pre-existing conditions in Montana. B. Guaranteed issue rules may apply in certain situations, requiring insurers to offer coverage regardless of health status. C. Individual health insurance plans are subject to Montana's mandated minimum coverage standards. D. Montana allows for short-term health insurance plans as a substitute for comprehensive individual health insurance. The correct answer is D. Montana allows for short-term health insurance plans as a substitute for comprehensive individual health insurance. Individual health insurance plans provide coverage for an individual, not a group. Montana adheres to federal regulations that allow insurers to consider health history when underwriting individual health insurance applications. This means they can deny coverage, offer a policy with a higher premium, or offer a limited benefit plan based on the applicant's health condition. However, guaranteed issue rules apply during open enrollment periods under the Affordable Care Act, and in some other situations, requiring insurers to offer coverage regardless of pre-existing conditions. Individual health insurance plans in Montana must meet minimum essential coverage standards mandated by the state or federal government. These standards typically outline a core set of benefits that must be covered by the plan. Short-term health insurance plans are not considered a substitute for comprehensive individual health insurance. They may have limitations on coverage and duration, and do not meet the minimum coverage requirements in Montana. Question 39. An agent is contacted by a client in Montana who has received a denial for their long-term care insurance claim. When discussing appeal rights, which of the following statements is true regarding appeals in Montana? A. Montana requires all long-term care insurers to offer a formal internal appeal process for denied claims. B. If the internal appeal is unsuccessful, the client can proceed directly to court action against the insurer. C. There is no time limit for filing an appeal with the Montana Commissioner of Securities and Insurance. D. Clients have the right to request an independent medical review of a denied long-term care insurance claim in Montana. The correct answer is A. Montana requires all long-term care insurers to offer a formal internal appeal process for denied claims. Montana requires all long-term care insurers to offer a formal internal appeal process for denied claims. This allows the policyholder to submit additional documentation or contest the insurer's decision. If the internal appeal is unsuccessful, the client has the right to file an external appeal with the Montana Commissioner of Securities and Insurance. There may be specific time limits for filing an external appeal, so it's important to consult the policy and contact the Montana Department of Insurance for guidance. Clients may also have the right to request an independent medical review of a denied long-term care insurance claim in Montana. This review would involve a qualified healthcare professional who is not affiliated with the insurance company. However, the specific process and rights may vary depending on the policy language and Montana regulations. Question 40. An agent is explaining Medicare Advantage, Part C, plans to a client in Montana. When discussing plan options, which of the following statements is true regarding Medicare Advantage plans in Montana? A. These plans are offered by private insurance companies as an alternative to traditional Medicare fee-for-service, Part A and B. B. All Medicare Advantage plans must cover exactly the same benefits as traditional Medicare. C. Enrolling in a Medicare Advantage plan automatically disenrolls the beneficiary from Medicare Part D, prescription drug coverage. D. Montana mandates that all Medicare beneficiaries must enroll in a Medicare Advantage plan. The correct answer is A. These plans are offered by private insurance companies as an alternative to traditional Medicare fee-for-service, Part A and B. Medicare Advantage, Part C, plans are offered by private insurance companies as an alternative to the traditional Medicare fee-for-service program, Parts A and B. These plans must be approved by Medicare and follow federal guidelines, but they can offer additional benefits and features not typically covered by traditional Medicare, such as vision or dental coverage. Unlike traditional Medicare, Medicare Advantage plans often operate like HMOs or PPOs, with networks of healthcare providers and potentially requiring referrals for specialists. Medicare Advantage plans are not required to cover exactly the same benefits as traditional Medicare, but they must provide at least the same level of basic coverage for hospitalization and doctor services. Enrolling in a Medicare Advantage plan does not automatically disenroll the beneficiary from Medicare Part D, prescription drug coverage. However, some Medicare Advantage plans may include prescription drug coverage within their benefits package. Montana does not mandate that all Medicare beneficiaries must enroll in a Medicare Advantage plan. Beneficiaries can choose between traditional Medicare or a Medicare Advantage plan depending on their needs and preferences. Question 41. A health insurance company in Montana is developing a new dental insurance plan. According to Montana's regulations on dental insurance, which of the following statements is accurate? A. Dental insurance plans typically cover preventive care services such as cleanings and x-rays, but not major dental procedures. B. These plans are not subject to Montana's insurance regulations because they are not considered health insurance. C. Montana mandates a specific set of benefits that all dental insurance plans must cover. D. Insurers are prohibited from placing any annual or lifetime dollar limits on dental insurance benefits in Montana. The correct answer is A. Dental insurance plans typically cover preventive care services such as cleanings and x-rays, but not major dental procedures. Dental insurance plans are a type of voluntary health insurance that helps pay for the costs of dental care. These plans typically cover preventive care services such as cleanings, exams, and x-rays, and may also cover a portion of the cost for minor restorative procedures like fillings. Major dental procedures, such as crowns or dentures, may be covered at a lower percentage or may have annual or lifetime dollar limits. Dental insurance plans are subject to Montana's insurance regulations to ensure consumer protection and financial solvency. Montana does not mandate a specific set of benefits that all dental insurance plans must cover, but insurers are required to disclose the details of their plans, including covered services and any limitations or exclusions. Insurers are not necessarily prohibited from placing annual or lifetime dollar limits on dental insurance benefits in Montana, but these limits must be clearly outlined in the plan documents. Question 42. A consumer in Montana is considering applying for disability income insurance. According to Montana's regulations on disability income insurance, which of the following statements is false? A. These policies typically replace a portion of the insured's income if they become disabled and unable to work. B. Montana mandates a minimum benefit amount for all disability income insurance policies. C. Insurers may offer disability income insurance with short-term or long-term benefit periods. D. Pre-existing conditions may limit coverage or be excluded altogether under a disability income insurance policy. The correct answer is B. Montana mandates a minimum benefit amount for all disability income insurance policies. Disability income insurance is designed to provide financial protection in case the policyholder becomes disabled and unable to work due to illness or injury. These policies typically replace a portion of the insured's pre-disability income, as outlined in the policy contract. The benefit amount is usually expressed as a percentage of earnings, e.g., 60% of income. Montana does not mandate a minimum benefit amount for disability income insurance policies. The specific benefit amount and duration of payments will depend on the policyholder's choices and the plan design. Insurers may offer disability income insurance with short-term benefit periods, lasting a few years, or long-term benefit periods, lasting until retirement or a set age. Pre-existing conditions can be a major factor in disability income insurance coverage. The insurance company may exclude coverage for pre-existing conditions altogether, or they may limit benefits for disabilities arising from pre-existing conditions. Question 43. An agent is working with a client in Montana who is interested in purchasing a variable universal life insurance policy. When discussing investment options, which of the following statements is least accurate regarding variable universal life insurance? A. Variable universal life insurance policies offer the potential for higher returns through investment growth, but also come with investment risk. B. The cash value component of these policies grows based on the performance of underlying investments chosen by the policyholder. C. Variable universal life insurance guarantees a death benefit and minimum interest rate on the cash value. D. Montana allows policyholders to choose from a variety of investment options within a variable universal life policy. The correct answer is C. Variable universal life insurance guarantees a death benefit and minimum interest rate on the cash value. Variable universal life insurance, VUL, combines features of traditional life insurance with investment flexibility. VUL policies offer a death benefit and accumulate a cash value component. However, unlike whole life insurance, the cash value in VUL grows based on the performance of underlying investment options chosen by the policyholder. This introduces investment risk, as the cash value can fluctuate depending on market conditions. Variable universal life insurance does not guarantee a minimum interest rate on the cash value. The growth of the cash value depends solely on the performance of the chosen investment options. Montana allows policyholders to choose from a variety of investment options within a variable universal life policy, such as stocks, bonds, or money market funds. This flexibility allows policyholders to potentially achieve higher returns, but also exposes them to investment risk. Question 44. A health insurance company in Montana is developing a new indemnity health insurance plan. According to Montana's regulations on indemnity health insurance, which of the following statements is true? A. Indemnity health insurance plans reimburse policyholders directly for covered medical expenses, up to a certain limit. B. These plans require policyholders to choose in-network healthcare providers to be eligible for coverage. C. Montana prohibits the sale of indemnity health insurance plans because they are considered outdated. D. Indemnity health insurance plans are not subject to Montana's insurance regulations. The correct answer is A. Indemnity health insurance plans reimburse policyholders directly for covered medical expenses, up to a certain limit. Indemnity health insurance plans reimburse policyholders directly for covered medical expenses, typically after the policyholder submits a claim and it is approved. Reimbursement is usually based on a fee schedule outlined in the policy, up to a certain limit per service or per year. Indemnity plans offer more flexibility in choosing healthcare providers, as they are not typically restricted to specific networks. Montana allows the sale of indemnity health insurance plans. In fact, indemnity plans are subject to Montana's insurance regulations to ensure consumer protection and financial solvency. However, these plans may be less common than managed care plans like HMOs or PPOs. Question 45. Mr. Hernandez is a Montana resident who wants to purchase a Medicare supplement policy, Medigap. He is currently enrolled in Medicare Parts A and B according to Montana law. Which of the following statements is false regarding Mr. Hernandez's Medigap policy options? A. Mr. Hernandez has a guaranteed right to purchase any Medigap plan offered by an insurer in Montana, regardless of his health status. B. Mr. Hernandez can choose a Medigap plan with standardized benefits, meaning the benefits are identical between all insurers offering that specific plan type. C. Mr. Hernandez has a 6-month open enrollment period after he is first eligible for Medicare Part B to purchase any Medigap plan without medical underwriting. D. Insurers in Montana are prohibited from denying or canceling Mr. Hernandez's Medigap policy solely because of his health status after the initial 6-month open enrollment period ends. The correct answer is A. Mr. Hernandez has a guaranteed right to purchase any Medigap plan offered by an insurer in Montana, regardless of his health status. Montana adheres to federal Medigap regulations, which require guaranteed issue rights during the open enrollment period but allow medical underwriting outside that window. So, Mr. Hernandez cannot be guaranteed any plan regardless of health, eliminates A. Question 46. A Montana resident purchases a long-term care insurance policy. The policy contains a provision with a 3-year benefit waiting period, which means the policy will not start paying benefits until 3 years after the insured meets the eligibility criteria for long-term care. According to Montana insurance regulations, this waiting period is A. Acceptable and within regulatory limits. B. Unacceptable and the insurer must offer a policy with a shorter waiting period. C. Acceptable, but the insurer must clearly disclose the waiting period in the policy documents. D. Acceptable, but only if the insured is informed about the waiting period in writing and has the right to cancel the policy within 30 days of receiving that information. The correct answer is C. Acceptable, but the insurer must clearly disclose the waiting period in the policy documents. Federal regulations allow long-term care insurers to offer policies with waiting periods. Montana follows these regulations. However, insurers must clearly disclose the waiting period, eliminates B. There is no requirement for a specific cancellation window based on the waiting period disclosure, eliminates D. Question 47. A health insurance company in Montana offers a health maintenance organization, HMO, plan. An HMO plan typically requires members to choose a primary care physician, PCP, for most covered services. According to Montana insurance regulations, which of the following statements regarding HMO plans is incorrect? A. The HMO plan must allow members to choose a PCP from a network of participating providers. B. The HMO plan may require members to obtain a referral from their PCP to see a specialist within the network. C. Montana residents enrolled in an HMO plan have the right to directly access certain preventive care services without a referral from their PCP. D. An HMO plan may offer benefits for out-of-network care, but these benefits may be less comprehensive than in-network coverage. The correct answer is C. Montana residents enrolled in an HMO plan have the right to directly access certain preventive care services without a referral from their PCP. Federal and Montana regulations do not guarantee a right to directly access all preventive care services without a referral in HMO plans. However, plans typically offer preventive care with minimal restrictions, eliminates C. Question 48. Ms. Garcia is a Montana resident considering purchasing a critical illness insurance policy. A critical illness policy pays a lump sum benefit if the insured is diagnosed with a covered critical illness, such as cancer or heart attack. According to Montana insurance regulations, critical illness insurance policies A. Are considered a form of health insurance and require guaranteed issue rights for all applicants. B. Are considered a form of life insurance and death benefits are only paid if the insured dies from a covered illness. C. are a separate category of insurance and insurers are not required to offer guaranteed issue for these policies. D. Are a separate category of insurance, but Montana law mandates specific benefits to be covered in all critical illness policies. The correct answer is C. Are a separate category of insurance and insurers are not required to offer guaranteed issue for these policies. Critical illness insurance is a separate category from health and life insurance in Montana. Insurers are not required to offer guaranteed issue, eliminates A. There is no mandate for specific covered illnesses, eliminates D. Question 49. An agent is replacing a Montana resident's existing life insurance policy with a new policy from a different insurer. According to Montana insurance regulations, the replacing agent has specific responsibilities regarding replacement. Which of the following is not a required responsibility? A. Provide the applicant with a written notice explaining the right to return the new policy for a full refund within a specific period. B. Disclose to the applicant, in writing, the material reasons for recommending the replacement. C. Obtain the applicant's written consent for the replacement after they have reviewed the information provided by the agent. D. Advise the applicant to contact their existing insurer to inquire about keeping their current policy. The correct answer is D. Advise the applicant to contact their existing insurer to inquire about keeping their current policy. Montana follows the National Association of Insurance Commissioners, NAIC, Model Replacement Life Insurance Act. While agents must disclose reasons and obtain consent, A, B, C, they are not required to advise contacting the existing insurer, eliminates D. Question 50. John, a resident of Montana, is diagnosed with a critical illness. His health insurance policy includes a critical illness rider. According to Montana law, which of the following statements is most accurate regarding John's critical illness rider benefits? A. The rider must pay a lump sum benefit regardless of the illness diagnosed. B. The rider benefit amount is calculated based on a percentage of John's death benefit. C. The payout is mandated to occur within a specific time frame after diagnosis. D. John has the right to cancel the critical illness rider at any time. The correct answer is C. The payout is mandated to occur within a specific time frame after diagnosis. Montana Administrative Code Title 66, Chapter 2, Part 10 outlines regulations for critical illness insurance. While riders can vary, most policies define covered critical illnesses and corresponding benefits. The rider typically pays a lump sum benefit upon diagnosis of a covered illness, helping manage medical costs or lost income. Montana law does not dictate a specific time frame for payouts, but it mandates insurers to disclose these details in the policy contract. Riders can be canceled, but following the terms outlined in the rider and the policy itself. Question 51. A Montana resident is replacing their existing group health insurance policy with an individual health insurance plan. When considering pre-existing conditions, Montana's guaranteed issue provision applies to A. Only employer-sponsored group health plans. B. All health insurance plans sold in the state. C. Individual health plans with guaranteed renewal. D. Medicare supplement insurance policies. The correct answer is B. All health insurance plans sold in the state. The Affordable Care Act, ACA, and Montana's adoption of its guaranteed issue provision prohibit health insurers from denying coverage or charging higher premiums based on pre-existing conditions. This applies to all individual and group health insurance plans offered in the state, excluding short-term health plans, fixed indemnity plans, and disability insurance. Question 52. Bill, a life insurance agent licensed in Montana, is presenting a new long-term care insurance policy to a client. According to Montana's regulations, which of the following statements is Bill required to disclose about long-term care insurance? A. The policy covers all potential future long-term care needs. B. Premiums remain level throughout the entire policy term. C. The state mandates long-term care insurance for all residents. D. The policy includes inflation protection riders. The correct answer is B. Premiums remain level throughout the entire policy term. Montana Code Annotated Section 3321206 outlines specific disclosure requirements for long-term care insurance. Bill must disclose that premiums may increase over time due to factors like inflation or claim experience. He should also explain policy benefits, limitations, exclusions, and renewal provisions. It's important to note that Montana doesn't mandate long-term care insurance, and inflation protection riders are optional add-ons. Question 53. Mary, a resident of Montana, is considering purchasing a Medicare supplement insurance policy, Medigap. According to Montana law, Medigap policies A. Are mandatory for all Medicare beneficiaries. B. Can be sold with any health insurance plan. C. Must be standardized across all insurance companies. D. Cover all out-of-pocket expenses associated with Medicare. The correct answer is C. Must be standardized across all insurance companies. Montana adheres to the National Association of Insurance Commissioners, NAIC, standardized Medigap plan designs. This means all Medigap policies with the same letter designation, e.g., Plan A, Plan F, offer identical coverage regardless of the insurance company. Choosing a specific plan helps beneficiaries understand coverage and compare costs between insurers. While Medigap plans help bridge gaps in Medicare coverage, they are not mandatory and don't cover all out-of-pocket expenses. Question 54. During the replacement of a life insurance policy in Montana, the contestability period A. Is automatically extended for another 2 years. B. Starts over from the date of the new policy's issuance. C. Remains unchanged from the original policy's timeframe. D. Is no longer applicable to the new policy. The correct answer is B. Starts over from the date of the new policy's issuance. The contestability period is a timeframe, typically 2 years, during which an insurer can contest the validity of a life insurance policy based on misrepresentations on the application. In Montana, replacing a life insurance policy resets the contestability period. This allows the insurer to investigate the insured's health at the time of the new policy issuance. Question 55. An insurance agent in Montana is explaining disability income insurance to a client. When discussing benefit payments, the agent should clarify that Montana law A. Requires all disability insurance policies to offer lifetime benefits. B. Defines a minimum benefit duration for all disability insurance policies. C. Mandates a specific waiting period before benefits begin. D. Prohibits the cancellation of disability insurance policies due to claims. The correct answer is B. Defines a minimum benefit duration for all disability insurance policies. Montana has adopted minimum standards for disability insurance policies. However, these standards don't dictate lifetime benefits or waiting periods. The agent should explain that policies typically offer benefits for a certain period, e.g., 2 years, 5 years, or to age 65, and have specific waiting periods before benefits commence, e.g., 30 days, 90 days. Montana law doesn't mandate a specific waiting period, but it allows insurers to set reasonable waiting times within the policy. Additionally, while some policies offer lifetime benefits, others have limitations on the benefit duration. The agent should highlight these details within the specific policy being offered. Finally, Montana law prohibits insurers from canceling or refusing to renew a disability insurance policy solely due to a claim. Question 56. A Montana resident is considering purchasing accident insurance. According to Montana regulations, accident insurance policies A. Must cover all injuries resulting from accidents. B. Cannot exclude pre-existing conditions. C. Are considered a form of health insurance. D. Require insurers to obtain prior authorization for covered services. The correct answer is C. Are considered a form of health insurance. Accident insurance is a limited benefit health insurance product that provides financial protection for specific expenses incurred due to accidental injuries. Montana allows accident insurance to exclude pre-existing conditions, unlike comprehensive health insurance. Accident insurance is not a substitute for health insurance and doesn't require prior authorization for covered services. Question 57. During a health insurance enrollment meeting in Montana, a potential client inquires about the HIPAA, Health Insurance Portability and Accountability Act, protections. The agent should explain that HIPAA A. Guarantees coverage for all applicants regardless of health status. B. Allows individuals to keep their health insurance plans when changing jobs. C. Protects the privacy of a person's health information. D. Sets standardized benefits for all health insurance plans. The correct answer is C. Protects the privacy of a person's health information. HIPAA is a federal law that protects the privacy of a person's health information. This includes medical history, test results, and treatment plans. While HIPAA doesn't guarantee health insurance coverage or set benefit standards, it allows individuals to maintain coverage when changing jobs under certain conditions. Question 58. A life insurance agent in Montana is presenting a universal life insurance policy to a client. When discussing policy flexibility, the agent should explain that Montana allows universal life policyholders to A. Withdraw a portion of the policy's death benefit without tax implications. B. Pay premiums on a flexible schedule with no minimum or maximum limits. C. Increase or decrease the death benefit amount within certain limits. D. Convert the policy to a different type of life insurance plan at any time. The correct answer is C and D. Universal life insurance offers flexibility compared to traditional whole life policies. Montana allows policyholders to increase or decrease the death benefit within certain limitations outlined in the policy contract. Additionally, most universal life policies allow conversion to a different type of life insurance plan, such as term life, without medical underwriting, subject to policy provisions. It's important to note that withdrawals from a universal life policy may have tax implications depending on the amount withdrawn and the policy's cash value accumulation. The agent should clarify these details based on the specific policy being offered. Question 59. An insurance agent in Montana is explaining Medicare Advantage, Part C, plans to a client. When discussing network limitations, the agent should clarify that Montana A. Requires all Medicare Advantage plans to offer out-of-network coverage. B. Prohibits insurance companies from offering Medicare Advantage plans. C. Mandates a standardized network of providers for all Medicare Advantage plans. D. Allows Medicare Advantage plans to have limitations on their provider networks. The correct answer is D. Allows Medicare Advantage plans to have limitations on their provider networks. Medicare Advantage plans are an alternative way to receive Medicare benefits through private insurance companies. Montana allows these plans to have network limitations, meaning they may only cover services received from in-network providers, with some exceptions for emergencies. Out-of-network coverage may be limited or unavailable depending on the specific plan. Question 60. During a life insurance policy application process in Montana, the applicant has the right to A. Review and decline the insurance company's final underwriting decision. B. Choose their own medical examiner for the life insurance policy. C. Record the entire application interview process. D. All of the above. The correct answer is A. Review and decline the insurance company's final underwriting decision. Montana adheres to the fair disclosure regulations outlined in the National Association of Insurance Commissioners, NAIC, model laws. An applicant has the right to receive a written explanation of the insurance company's underwriting decision, including the reason for approval or denial. While the applicant can't necessarily decline the decision, they can inquire further or reapply after addressing any health concerns. The insurance company selects the medical examiner, and recording the application interview process typically requires the agent's consent. Question 61. According to Montana law, which of the following statements is most accurate regarding replacement of health insurance policies? A. Insurers are required to offer guaranteed replacement coverage to all policyholders. B. Replacement policies must always provide superior benefits compared to the existing plan. C. Insurers can deny replacement coverage based on the applicant's health status. D. Insurers must disclose any potential loss of coverage during the replacement process. The correct answer is D. Insurers must disclose any potential loss of coverage during the replacement process. Montana mandates insurers to disclose important information during the replacement of a health insurance policy. This includes potential loss of coverage, changes in benefits, and potential impact on pre-existing condition limitations. While insurers aren't obligated to offer guaranteed replacement or superior benefits, they cannot deny coverage solely based on the applicant's health if the policy meets the guaranteed issue requirements. Question 62. A health insurance agent in Montana is explaining short-term health insurance plans to a client. It's important for the agent to clarify that Montana A. requires short-term health plans to offer comprehensive coverage similar to ACA-compliant plans. B. Mandates the renewal of short-term health plans for all policyholders. C. Limits the maximum duration of coverage for short-term health plans. D. Prohibits the sale of short-term health plans altogether. The correct answer is C. Limits the maximum duration of coverage for short-term health plans. Short-term health insurance plans in Montana are intended to provide temporary coverage, typically lasting for a period of less than 12 months, with the option for renewal in some cases but subject to policy provisions and state regulations. These plans generally don't offer the same level of comprehensive coverage as ACA-compliant health insurance plans. Montana, like many states, has limitations on the maximum duration of short-term health insurance coverage. Question 63. An insurance agent is presenting a cancer insurance policy to a client in Montana. According to Montana regulations, cancer insurance is classified as A. A form of life insurance with a death benefit triggered by a cancer diagnosis. B. A type of disability insurance that replaces income lost due to a cancer diagnosis. C. A limited benefit health insurance that provides a lump sum benefit upon cancer diagnosis. D. A Medicare supplement insurance plan specifically designed for cancer patients. The correct answer is C. A limited benefit health insurance that provides a lump sum benefit upon cancer diagnosis. Cancer insurance is a specific type of limited benefit health insurance offered in Montana. These policies are separate from life insurance and disability insurance. They provide a lump sum cash benefit upon diagnosis of a covered cancer to help manage treatment costs or lost income. Cancer insurance is not a substitute for major medical health insurance and doesn't qualify as a Medicare supplement plan. Question 64. When discussing professional liability insurance, errors and omissions insurance, with a client in Montana, the agent should explain that this type of coverage A. Protects the policyholder's personal assets in case of a lawsuit. B. Is mandatory for all licensed professionals in the state. C. Reimburses the policyholder for any fines or penalties imposed by regulatory bodies. D. Covers damage caused to the policyholder's property during business operations. The correct answer is A. Protects the policyholder's personal assets in case of a lawsuit. Professional liability insurance, also known as errors and omissions, E&O, insurance, protects covered professionals from financial losses arising from claims of negligence or errors in their professional services. In Montana, E&O insurance is not mandatory for all professions, but it's highly recommended for many professionals such as accountants, lawyers, and real estate agents. This type of insurance helps shield the policyholder's personal assets by covering legal defense costs and settlements associated with covered claims. While E&O insurance may provide some coverage for fines depending on the specific policy, it generally doesn't reimburse for regulatory fines or penalties. Property damage is typically covered by separate commercial property insurance. Question 65. A life insurance agent in Montana is explaining life insurance policy provisions to a client. When discussing grace periods, the agent should clarify that A. The grace period allows the policyholder to pay premiums after the due date without any penalties. B. The grace period duration is always 30 days for all life insurance policies. C. Grace period interest applies to any overdue premiums paid during this time frame. D. The policy lapses immediately if a premium is not paid by the due date. The correct answer is A. The grace period allows the policyholder to pay premiums after the due date without any penalties. The grace period is a time frame, typically 30 days but can vary by policy, offered by life insurers that allows policyholders to pay overdue premiums without the policy lapsing. During this grace period, the policy remains active and benefits are still payable. However, some insurers may charge interest on overdue premiums paid during the grace period. While the grace period provides a buffer for late payments, the policy will lapse if the premium remains unpaid after the grace period ends. Question 66. An insurance company in Montana is developing a new health insurance plan. According to Montana's prior authorization requirements, the insurer A. must obtain prior authorization for all covered services before treatment begins. B. is prohibited from requiring prior authorization for any services. C. can establish a prior authorization process for specific services outlined in the policy. D. needs approval from the Montana Commissioner of Insurance for any prior authorization requirements. The correct answer is C. can establish a prior authorization process for specific services outlined in the policy. Montana allows health insurance companies to implement a prior authorization process for certain covered services within a health insurance plan. This process requires the healthcare provider to obtain approval from the insurer before treatment begins. The specific services requiring prior authorization should be clearly defined in the policy documents. While insurers have this flexibility, they are not mandated to require prior authorization for all services, nor do they need separate approval from the Montana Commissioner of Insurance for this process, as long as it complies with state regulations. Question 67. During a pre-licensing education course in Montana, an instructor is explaining the role of the National Association of Insurance Commissioners, NAIC, in health insurance. The NAIC A. sets national health insurance rates for all policyholders. B. develops standardized health insurance benefits across all states. C. creates model laws that states can adopt for insurance regulation. D. directly regulates the activities of individual health insurance agents. The correct answer is C. creates model laws that states can adopt for insurance regulation. The National Association of Insurance Commissioners, NAIC, is a nonprofit organization that works collaboratively with state insurance departments across the country. The NAIC doesn't directly regulate insurance agents or set national health insurance rates or benefits. Instead, it develops model laws and best practices that states can consider when establishing their own insurance regulations. These model laws address various aspects of insurance, including health insurance agent licensing, policy standards, and consumer protections. Individual states adopt or modify these model laws to fit their specific needs and circumstances. Question 68. A Montana resident is considering a health insurance plan with a high-deductible health plan, HDHP, design. The agent should explain that Montana allows HDHPs to be paired with A. Only standalone dental insurance plans. B. Any type of health savings account, HSA. C. Only employer-sponsored health reimbursement arrangements, HRAs. D. Neither HSAs nor HRAs. The correct answer is B. Any type of health savings account, HSA. Montana adheres to federal regulations regarding high-deductible health plans, HDHPs. A key feature of HDHPs is their eligibility to be paired with health savings accounts, HSAs. HSAs allow individuals to contribute pre-tax dollars to save for qualified medical expenses. While HDHPs can be offered with employer-sponsored HRAs under certain conditions, Montana allows residents to enroll in an HDHP with a standalone HSA regardless of employment status. Question 69. An insurance agent in Montana is contacted by a client who wants to cancel their life insurance policy. According to Montana regulations, the policyholder has the right to A. Receive a full refund of all premiums paid regardless of the policy type or duration. B. Cancel the policy at any time without any notification to the insurance company. C. Choose a cancellation method outlined in the policy contract. D. Convert the policy to a different type of life insurance without underwriting. The correct answer is C. Choose a cancellation method outlined in the policy contract. Life insurance policies typically outline cancellation options within the contract itself. Montana allows policyholders to cancel their life insurance policies following the terms and conditions specified in the policy documents. These options may include receiving a cash surrender value, depending on the policy type and duration, or converting the policy to a different type of life insurance, subject to underwriting approval. Policyholders are not entitled to a full refund of premiums and should be informed about potential surrender charges associated with early cancellation. Question 70. During a health insurance enrollment meeting, a potential client inquires about the difference between Preferred Provider Organization, PPO, plans and Health Maintenance Organization, HMO, plans. The agent should explain that A. PPO plans offer a wider network of providers but typically require higher premiums. B. HMO plans require referrals from a primary care physician, PCP, to see specialists. C. Both PPO and HMO plans offer the same level of out-of-network coverage. D. PPO plans have no deductibles, while HMO plans always have deductibles. The correct answer is A and B. PPO, Preferred Provider Organization, and HMO, Health Maintenance Organization, are two common types of health insurance network plans. PPO plans generally offer a broader network of providers, allowing policyholders more flexibility in choosing doctors and specialists. However, using out-of-network providers in a PPO plan typically comes with higher costs compared to in-network providers. HMO plans, on the other hand, typically require referrals from a primary care physician, PCP, to see specialists within the plan's network. This approach aims to coordinate care and potentially reduce costs. Out-of-network coverage in HMO plans is usually limited or unavailable. Regarding deductibles, both PPO and HMO plans can have deductibles, and the specific deductible amount will vary depending on the chosen plan. Question 71. An insurance agent working in Montana is explaining Medicare Part D, prescription drug coverage, to a client. Medicare Part D plans typically have A. No deductibles and cover all prescription drugs with no out-of-pocket costs. B. Standardized formularies that may exclude certain medications. C. A donut hole coverage gap where beneficiaries are responsible for a portion of the drug costs. D. Lifetime maximum benefit limits on covered prescription drugs. The correct answer is C, a donut hole coverage gap where beneficiaries are responsible for a portion of the drug costs. Medicare Part D plans are standalone prescription drug plans that help Medicare beneficiaries pay for covered medications. These plans typically have formularies, which are lists of covered drugs. While some plans may have lower deductibles or co-pays, a common feature is a coverage gap often referred to as the donut hole. In this gap, beneficiaries are responsible for a portion of the medication costs until they reach a specific out-of-pocket threshold. Afterward, catastrophic coverage kicks in, significantly reducing costs. Unlike Medicare Part A and B, Medicare Part D plans do not have lifetime maximum benefit limits, but individual plan designs may have limitations on specific medications. Question 72. Montana law mandates that accident insurance policies sold in the state A. must provide coverage for any accidental death regardless of the cause. B. cannot exclude pre-existing conditions that contribute to an accident. C. include accidental dismemberment coverage as a mandatory benefit. D. clearly define covered accidents within the policy language. The correct answer is D. clearly define covered accidents within the policy language. Accident insurance policies are limited health benefit plans that provide financial protection for specific expenses incurred due to accidental injuries. Montana allows accident insurers to exclude pre-existing conditions and doesn't mandate accidental dismemberment coverage or require coverage for all accidental deaths. However, Montana law requires accident insurance policies to clearly define covered accidents within the policy language. This helps ensure policyholders understand what events trigger benefits under the policy. Question 73. A consumer in Montana is considering a long-term care insurance policy. The agent should explain that long-term care insurance policies typically A. cover all costs associated with any long-term care needs. B. offer benefit payments regardless of whether the care is received at home or in a facility. C. require policyholders to exhaust all other financial resources before benefits are paid. D. increase in cost as the policyholder ages due to rising healthcare costs. The correct answer is C and D. Long-term care insurance helps individuals pay for some of the costs associated with long-term care services, such as assistance with daily living activities. These policies typically don't cover all long-term care expenses and may have limitations on the daily benefit amount, duration of coverage, and eligibility requirements. Another important point to consider is that some plans may require policyholders to exhaust other financial resources, such as Medicare benefits, before long-term care insurance benefits begin. Finally, premiums for long-term care insurance often increase over time due to rising healthcare costs and the policyholder's age. The agent should carefully explain these limitations and cost factors to ensure the client understands the policy's scope of coverage. Question 74. An insurance agent in Montana is contacted by a client who is concerned about the agent's compensation for selling a particular health insurance plan. According to Montana regulations, the agent is required to A. disclose the amount of commission earned on the sale of the policy. B. offer the client all available health insurance plans regardless of commission structure. C. explain how the agent's compensation is determined without disclosing specific amounts. D. recommend the health insurance plan with the highest commission payout. The correct answer is C. explain how the agent's compensation is determined without disclosing specific amounts. Montana requires insurance agents to act in good faith and prioritize the needs of their clients. While agents aren't obligated to disclose the exact commission earned on a specific policy, they should be transparent about how their compensation is determined. This could involve explaining that commissions are typically based on a percentage of the premium or outlining different compensation structures without revealing specific figures. Agents should prioritize finding a suitable plan for the client's needs, not focus solely on plans with the highest commissions. D. They should also present a reasonable selection of available plans considering the client's situation. B. Question 75. During a critical illness insurance presentation in Montana, the agent should clarify that these policies A. Are mandated by Montana for all residents with health insurance. B. Typically cover only a limited number of critical illnesses. C. Pay a lump sum benefit upon diagnosis of any serious medical condition. D. Can be added as riders to existing life insurance policies. The correct answer is B and D. Critical illness insurance is an optional life or health insurance rider or standalone policy that pays a lump sum benefit upon diagnosis of a covered critical illness. Montana doesn't mandate critical illness coverage. These policies typically define a specific list of covered critical illnesses, not just any serious medical condition. C. A key benefit is the flexibility to use the lump sum benefit for various needs, such as medical expenses, lost income, or debt repayment. Critical illness riders can be added to existing life insurance policies, depending on the policy and insurance company's offerings. Question 76. An insurance company in Montana is developing a new individual health insurance plan. Montana law requires that the policy clearly disclose A. The name and contact information of the agent who will sell the plan. B. Exclusions and limitations on coverage in a concise and easy-to-understand format. C. Investment returns associated with any health savings account, HSA, option. D. Ratings and reviews from independent consumer reporting agencies. The correct answer is B. Exclusions and limitations on coverage in a concise and easy-to-understand format. Montana emphasizes transparency in health insurance policies. A critical requirement is the clear and concise disclosure of exclusions and limitations on coverage within the policy documents. This empowers policyholders to understand what is and isn't covered by the plan. The agent selling the plan may not be explicitly identified in the policy itself. A. Investment returns for HSAs are typically variable and wouldn't be guaranteed by the insurance company. C. Finally, including ratings from independent consumer reporting agencies is not mandated by Montana law. D. Question 77. A resident of Montana inquires about the portability of their group health insurance plan when they change jobs. The agent should explain that under COBRA, Consolidated Omnibus Budget Reconciliation Act, continuation provisions. A. The continuation of coverage is mandatory for all employers. B. The individual is responsible for paying the entire premium cost, including the employer's portion. C. Continuation is guaranteed for a specific time frame, but the cost may vary depending on the plan. D. COBRA is only applicable to individual health insurance plans. The correct answer is C. Continuation is guaranteed for a specific time frame, but the cost may vary depending on the plan. COBRA grants certain individuals the right to continue coverage under a group health plan for a temporary period after a qualifying event, such as job loss. While employers are not obligated to offer COBRA continuation, Montana adheres to COBRA regulations. The individual is responsible for paying the entire premium cost, including the employer's share, which can make COBRA continuation expensive. B. COBRA offers guaranteed continuation for a specific time frame, typically 18 or 36 months depending on the qualifying event. The cost may vary depending on the specific plan design and underlying group health insurance premium. COBRA applies to group health insurance plans, not individual plans. D. Question 78. An insurance agent in Montana is explaining the concept of guaranteed issue to a client considering a health insurance policy. Guaranteed issue means that A. The insurance company cannot deny coverage based on pre-existing conditions. B. The policy cannot be canceled by the insurance company for any reason. C. Premiums for the policy will remain level throughout the entire term. D. The policy benefits cannot be changed by the insurance company. The correct answer is A. The insurance company cannot deny coverage based on pre-existing conditions. Guaranteed issue is a provision within the Affordable Care Act, ACA, that prohibits health insurers from denying coverage or charging higher premiums based solely on pre-existing conditions. This allows individuals with pre-existing medical conditions to obtain health insurance. A. Guaranteed issue doesn't prevent cancellation by the insurer for non-payment of premiums or other violations of policy terms. B. Premiums can change over time due to factors like inflation or claims experience, and guaranteed issue doesn't guarantee level premiums. C. Policy benefits can be modified by the insurer during renewal periods, but these changes typically apply to all policyholders within a specific plan and must comply with state regulations. D. Question 79. A Montana resident is considering a disability income insurance policy. When discussing benefit payments, the agent should explain that Montana law A. defines a minimum monthly benefit amount for all disability insurance policies. B. requires disability benefits to be paid tax-free regardless of the tax filing status. B. mandates that benefits continue until the policyholder reaches full retirement age. D. prohibits the integration of disability benefits with other income sources. The correct answer is D. prohibits the integration of disability benefits with other income sources. Montana adopts minimum standards for disability insurance policies, but these standards don't dictate a minimum monthly benefit amount. A. The taxability of disability benefits depends on how the premiums were paid. If premiums were paid with pre-tax dollars, benefits may be taxable as income. B. Disability benefits typically continue for a defined period within the policy, not necessarily until full retirement age. C. While integration allows for coordination of disability benefits with other income sources, like Social Security, Montana law doesn't necessarily prohibit this practice. D. The agent should clarify these details based on the specific policy being offered. Question 80. A life insurance agent working in Montana is presenting a universal life insurance policy to a client. The agent should explain that Montana allows universal life policyholders to A. withdraw a portion of the cash value without any tax implications, regardless of the amount withdrawn. B. choose from a variety of investment options within the policy to grow the cash value. C. pay premiums on a flexible schedule with no minimum or maximum limits, but any lapse in premium payment may impact the policy. D. all of the above. The correct answer is D. all of the above. Universal life insurance offers more flexibility than traditional whole life policies. Montana allows policyholders to choose from a variety of investment options within the policy's cash value account to potentially grow their savings. B. pay premiums on a flexible schedule within certain limits outlined in the policy. There may not be a minimum or maximum, but lapses in premium payment can affect the policy's cash value and death benefit. C. withdraw a portion of the cash value accumulated in the policy. However, tax implications may apply depending on the amount withdrawn and how the premiums were paid. A. It's important to note that excessive withdrawals can reduce the death benefit and may eventually lapse the policy if the cash value falls below a minimum threshold. Question 81. During a health insurance enrollment meeting, a potential client inquires about the difference between a deductible and a copayment. The agent should explain that A. a deductible is a fixed amount the policyholder must pay annually for covered services, while a copayment is a percentage of the covered service cost. B. deductibles apply to all covered services, while copays only apply to certain services like doctor visits. C. the policyholder is responsible for all costs until the deductible is met, then the copayment applies. D. both deductibles and copays are designed to encourage preventive care visits. The correct answer is C. The policyholder is responsible for all costs until the deductible is met, then the copayment applies. A deductible and a copayment are two common cost-sharing features in health insurance plans. Deductible. a fixed dollar amount the policyholder must pay out of pocket for covered services before the insurance company starts sharing the costs. Once the deductible is met, the plan typically begins paying a certain percentage of covered costs. C. Copayment, a fixed dollar amount the policyholder pays for certain covered services, typically doctor visits or prescriptions, regardless of whether the deductible has been met. Copays are typically lower than deductibles. A. While some plans may have separate deductibles for specific services like hospitalization, deductibles generally apply to most covered services, not just preventive care. B. Deductibles and copays can influence healthcare utilization, but their primary purpose is to share costs between the policyholder and the insurer, not necessarily to encourage preventive care. D. Question 82. An insurance agent in Montana is contacted by a client who wants to file a life insurance claim. The agent should advise the client to A. Contact the insurance company directly to initiate the claim filing process. B. Submit the original death certificate and the policy contract to the insurance company. C. Both A and B. D. Neither A nor B, as the agent should handle the claim filing process on the client's behalf. The correct answer is C. Both A and B. While the agent can guide the client through the claim filing process, the insurance company will ultimately handle the claim. The recommended course of action is for the client to contact the insurance company directly to initiate the claim process and obtain specific instructions. A. Submit the required documentation, such as the original death certificate and the policy contract, to the insurance company. B. The insurance company will typically provide a list of required documents. The agent can assist the client by providing information on the claim filing process, helping gather necessary documents, and answering questions throughout the process. However, the agent cannot act as the legal representative of the policyholder and shouldn't handle the claim filing on their behalf. D. Question 83. An insurance company in Montana is developing a new Medicare supplement insurance plan, Medigap. Medigap plans are designed to A. Replace lost wages due to a Medicare beneficiary's retirement. B. Help Medicare beneficiaries pay for covered services not covered by original Medicare, Parts A and B. C. Provide an alternative to traditional Medicare Advantage, Part C, plans. D. Act as a long-term care insurance solution for Medicare beneficiaries. The correct answer is B. Help Medicare beneficiaries pay for covered services not covered by original Medicare, Parts A and B. Medicare supplement insurance plans, also known as Medigap plans, are optional insurance policies designed to work alongside original Medicare, Parts A and B. They help beneficiaries pay for certain out-of-pocket costs associated with Medicare coverage, such as deductibles, coinsurance, and copays. B. Medigap plans don't replace lost wages, A, and aren't alternatives to Medicare Advantage plans, C, which offer a different approach to Medicare coverage. While some Medigap plans may offer benefits for skilled nursing facility stays, they are not comprehensive long-term care insurance solutions. D. Question 84. A consumer in Montana is considering a variable universal life insurance policy. The agent should explain that the cash value growth in a variable universal life insurance policy A. is guaranteed by the insurance company and grows at a fixed interest rate. B. is based on the performance of the underlying investment options chosen by the policyholder. C. cannot be accessed until the policyholder reaches retirement age. D. is subject to surrender charges if withdrawn within the first few years of the policy. The correct answer is B and D. Variable universal life insurance is a type of universal life policy that offers more investment flexibility. The cash value in a variable universal life policy grows based on the performance of the underlying investment options chosen by the policyholder. B. These investment options can vary from conservative to aggressive, and their performance is not guaranteed by the insurance company. A. Policyholders can access the cash value through withdrawals or loans, but surrender charges may apply, particularly for withdrawals made within the first few years of the policy. D. Question 85. An insurance agent working in Montana is explaining accidental death benefit riders to a client. Accidental death benefit riders are typically offered as additions to A. Property and casualty insurance policies, such as auto insurance. B. Health insurance plans to provide additional coverage for accidental injuries. C. Life insurance policies to pay an additional benefit if death is accidental. D. Medicare supplement insurance plans, Medigap, to cover accidental injuries. The correct answer is C. Life insurance policies to pay an additional benefit if death is accidental. Accidental death benefit riders are optional add-ons typically offered with life insurance policies. These riders pay an additional benefit to the beneficiary if the death is accidental. C. They are not part of property and casualty insurance, A, or health insurance plans, B. Medigap plans, D. Supplement Medicare coverage and generally don't include accidental death benefits. Question 86. A Montana resident is interested in purchasing a long-term care insurance policy. The agent should explain that these policies typically A. Cover all costs associated with any long-term care needs regardless of location. B. Offer benefits regardless of whether the care is received at home or in a facility. C. Pay for custodial care services that assist with daily living activities. D. Increase in premium costs as the policyholder ages due to rising healthcare costs and potential claims. The correct answer is C and D. Long-term care insurance helps individuals pay for some of the costs associated with long-term care services, such as assistance with daily living activities like bathing, dressing, and eating. These policies typically don't cover all long-term care expenses and may have limitations on the daily benefit amount, duration of coverage, and eligibility requirements. An important point to consider is that most policies focus on paying for skilled care, which is typically provided in a facility under the supervision of licensed healthcare professionals. Some plans, however, may also offer benefits for custodial care, which assists with daily living activities and can be received at home or in a facility. C. It's important to clarify this distinction with each specific policy. Finally, premiums for long-term care insurance often increase over time due to rising healthcare costs and the policyholder's age as the likelihood of needing long-term care services increases. D. Question 87. An insurance agent in Montana is contacted by a client who is concerned about the agent's impartiality when recommending a specific health insurance plan. Montana requires life and health insurance agents to A. Recommend the plan with the lowest possible premium regardless of the client's needs. B. Prioritize the agent's commission structure when making plan recommendations. C. Act in good faith and recommend a plan that best meets the client's needs and budget. D. Offer all available health insurance plans to the client without any recommendations. The correct answer is C. Act in good faith and recommend a plan that best meets the client's needs and budget. Montana mandates that insurance agents follow a standard of care that prioritizes the client's best interests. This means agents should act in good faith and avoid misleading or pressuring clients into unsuitable plans. Gather information about the client's health needs, budget, and preferences. Recommend a plan that aligns with the client's situation, not solely focus on the plan with the lowest premium, A, or the one with the highest commission for the agent, B. Present a reasonable selection of available plans without overwhelming the client, D. Question 88. A health insurance company in Montana is developing a new short-term health insurance plan. According to Montana regulations, the maximum coverage period for a short-term health plan cannot exceed A. 1 year with no option for renewal. B. 2 years with guaranteed renewal for all policyholders. C. There is no maximum coverage period in Montana for short-term health plans. D. The maximum coverage period is determined by the insurance company at its discretion. The correct answer is A. 1 year with no option for renewal. Short-term health insurance plans in Montana are intended to provide temporary health coverage, typically lasting for a period of less than 12 months. These plans are not replacements for comprehensive health insurance. Montana, like many states, has limitations on the maximum duration of coverage for short-term health plans. The maximum coverage period cannot exceed 1 year, and renewal is not guaranteed. A. The insurer may offer the option to renew the policy, but it's not mandatory. Short-term health plans don't offer guaranteed renewal for all policyholders. B. There is a maximum coverage period, and it's not open-ended. C. Or left solely to the insurer's discretion. D. Question 89. An insurance agent working in Montana is explaining Medicare Part D, prescription drug coverage, to a client. Medicare Part D plans typically have A. A single, standard formulary that covers all prescription drugs. B. No coverage for over-the-counter medications. C. The flexibility to use mail-order pharmacies to potentially reduce medication costs. D. Premiums that depend on the beneficiary's income level. The correct answer is C. The flexibility to use mail-order pharmacies to potentially reduce medication costs. While Medicare Part D covers a wide range of prescription drugs, it doesn't necessarily have a single, standard formulary for all plans. A. Formularies are lists of covered medications and may vary depending on the specific Part D plan chosen. Part D generally doesn't cover over-the-counter medications. B. However, some plans may offer limited coverage for specific over-the-counter medications when used in conjunction with a covered prescription drug. One advantage of Medicare Part D is the flexibility to use mail-order pharmacies. Mail-order pharmacies often offer medications at lower costs compared to traditional retail pharmacies. C. Part D premiums are typically based on a combination of factors, not solely on the beneficiary's income level. D. While some states offer assistance programs to help low-income beneficiaries pay for Part D premiums, eligibility is determined by income and other factors. Question 90. A consumer in Montana is considering a cancer insurance policy. The agent should explain that cancer insurance policies A. Are mandated by Montana for all residents with health insurance. B. Typically provide a lump sum benefit upon diagnosis of any type of cancer. C. Can be offered as riders to existing life insurance policies or as standalone policies. D. Pay for all costs associated with cancer treatment. The correct answer is C. Can be offered as riders to existing life insurance policies or as standalone policies. Cancer insurance is an optional life or health insurance rider or standalone policy that pays a lump sum benefit upon diagnosis of a covered cancer condition. Montana doesn't mandate cancer insurance coverage. A. These policies typically have specific definitions of covered cancers, not necessarily any type of cancer. B. A key benefit is the flexibility to use the lump sum benefit for various cancer-related expenses or other needs. Cancer insurance riders can be added to existing life insurance policies, depending on the policy and insurance company's offerings. C. It's important to clarify that cancer insurance is not a substitute for comprehensive health insurance and typically doesn't cover all cancer treatment costs. D. Question 91. An insurance agent in Montana is contacted by a client who has received a cancellation notice for their individual health insurance plan. Montana law requires that insurers provide written notice of cancellation. A. Only in cases of non-payment of premiums. B. At least 30 days before the cancellation takes effect, along with the reason for cancellation. C. Both A and B. D. The notice period and reason for cancellation are at the insurer's discretion. The correct answer is B. At least 30 days before the cancellation takes effect, along with the reason for cancellation. Montana follows specific requirements for cancellation of individual health insurance plans. Insurers are obligated to provide written notification to the policyholder at least 30 days before the cancellation takes effect. The written notice should also explain the reason for cancellation. Common reasons for cancellation may include non-payment of premiums, but other reasons, such as plan discontinuation or change in residence restrictions, could also be valid reasons for cancellation. The insurer cannot unilaterally determine the notice period or withhold the reason for cancellation. D. Question 92. An insurance agent working in Montana is presenting critical illness insurance to a client. The agent should clarify that these policies A. are renewable for life as long as premiums are paid on time. B. typically require a medical underwriting process to assess the applicant's health. C. pay a benefit only if the critical illness is diagnosed within the first year of the policy. D. are not considered health insurance and do not require adherence to pre-existing condition exclusions. The correct answer is B. typically require a medical underwriting process to assess the applicant's health. Critical illness insurance is not renewable for life like some whole life insurance policies. A. These policies are typically renewed on a guaranteed or non-guaranteed basis for a specific period, depending on the plan design. Most critical illness insurance plans require medical underwriting, B, to assess the applicant's health and determine the eligibility and premium amount. Benefits are not limited to the first year of coverage, C. Critical illness insurance is a form of health insurance, and pre-existing condition exclusions may apply depending on the policy and the state's regulations, D. Question 93. A resident of Montana inquires about the advantages of group health insurance plans. The agent should explain that group plans typically offer A. guaranteed acceptance regardless of pre-existing medical conditions. B. lower premiums due to bargaining power of the sponsoring group. C. a wider variety of plan options compared to individual plans. D. both B and C. The correct answer is D. both B and C. Group health insurance plans are offered to members of a group, such as employees of a company or members of an association. These plans offer several advantages. Lower premiums due to the bargaining power of the sponsoring group, which can negotiate lower rates with insurers. B. A wider variety of plan options compared to individual plans, allowing participants to choose a plan that best meets their needs. C. However, group plans don't necessarily guarantee acceptance regardless of pre-existing conditions. A. While the Affordable Care Act, ACA, prohibits group plans from denying coverage or charging higher premiums based solely on pre-existing conditions, there may be other eligibility requirements or limitations. Question 94. An insurance agent in Montana is explaining disability income insurance to a client. When discussing benefit payments, the agent should clarify that A. Social Security disability benefits will automatically offset disability income insurance benefits. B. Montana has a mandated minimum benefit amount for all disability insurance policies. C. Most disability insurance policies define a grace period for late premium payments before coverage lapses. D. Benefits are typically paid tax-free regardless of how the premiums were paid. The correct answer is C. Most disability insurance policies define a grace period for late premium payments before coverage lapses. Social Security disability benefits may be offset against disability income insurance benefits, but this depends on the specific plan provisions and the integration language within the policy. A. Montana doesn't mandate a minimum benefit amount for disability insurance policies. B. Most disability insurance policies offer a grace period for late premium payments before the policy lapses, allowing some flexibility for policyholders. C. The tax treatment of disability benefits depends on how the premiums were paid. If premiums were paid with pre-tax dollars, benefits may be taxable as income. D. It's important to consult with a tax advisor to understand the specific tax implications. Question 95. A Montana resident is considering a high-deductible health plan, HDHP, with a health savings account, HSA. The agent should explain that HSAs A. are mandatory savings accounts for all Montana residents with health insurance. B. allow contributions to be tax-deductible, but withdrawals for non-qualified medical expenses are taxed. C. can be used to pay for premiums for the HDHP they are paired with. D. all of the above, A, B, and C. The correct answer is B. allow contributions to be tax-deductible, but withdrawals for non-qualified medical expenses are taxed. Health savings accounts, HSAs, are tax-advantaged savings accounts paired with high-deductible health plans, HDHPs. They are not mandatory for Montana residents with health insurance, A. Contributions to HSAs may be tax-deductible, depending on the individual's tax filing status, B. However, withdrawals for non-qualified medical expenses are typically taxed as income and may also be subject to a penalty. HSA funds can be used to pay for a variety of qualified medical expenses, but they cannot be used to pay premiums for the HDHP they are paired with, C. Question 96. An insurance agent working in Montana is contacted by a client who wants to cancel their life insurance policy. The agent should advise the client of the following options. A. surrender the policy for its cash value, if applicable. B. convert the policy to a different type of life insurance with the same insurer. C. assign the policy's death benefit to another person. D. all of the above, A, B, and C. The correct answer is D. all of the above, A, B, and C. Depending on the life insurance policy type and terms, a policyholder in Montana may have several options if they want to cancel their policy. Surrender the policy for its cash value. Whole life and some universal life insurance policies accumulate cash value over time. Surrendering the policy allows the policyholder to access this cash value, but it typically comes with a surrender charge, A. Convert the policy to a different type of life insurance with the same insurer. This may be possible depending on the policy type and the insurer's guidelines, B. Assign the policy's death benefit to another person. This allows the policyholder to name a new beneficiary to receive the death benefit, C. Question 97. A consumer in Montana is considering a Medicare supplement insurance plan, Medigap. The agent should explain that Medigap plans typically do not cover A. hospital room and board charges. B. prescription drug costs. C. copayments for doctor visits. D. all of the above. The correct answer is B. prescription drug costs. Medicare supplement insurance plans, Medigap, are designed to help Medicare beneficiaries pay for out-of-pocket costs associated with Original Medicare, Parts A and B. They typically cover expenses like hospital room and board charges after the Medicare Part A deductible has been met, A. copayments for doctor visits and other covered services under Medicare Part B, C. Medigap plans generally do not cover prescription drug costs, *B. These costs may be covered by a separate Medicare Part D prescription drug plan. Question 98. A life insurance agent in Montana is meeting with a young client who is interested in life insurance options. The agent should explain that term life insurance. A. offers lifetime coverage, but with premiums that increase significantly over time. B. provides temporary coverage for a specified period, with premiums that typically remain level for the term. C. builds cash value that the policyholder can access while living. D. is typically more expensive than whole life insurance policies for the same death benefit amount. The correct answer is B. provides temporary coverage for a specified period, with premiums that typically remain level for the term. Term life insurance is designed to provide temporary coverage for a set period, such as 10, 20, or 30 years. Premiums typically remain level throughout the chosen term. B. Term life insurance does not offer lifetime coverage like whole life insurance. A. It also doesn't accumulate cash value that the policyholder can access while living. C. Term life insurance is generally less expensive than whole life insurance for the same death benefit amount because it only pays out if the insured dies within the specified term. D. Question 99. A resident of Montana is considering long-term care insurance. The agent should clarify that these policies typically A. Cover all costs associated with any long-term care needs regardless of location. B. Only provide benefits for care received in a facility setting. C. May not pay for custodial care services that assist with daily living activities. D. Have premiums that decrease over time as the policyholder ages. The correct answer is C. May not pay for custodial care services that assist with daily living activities. Long-term care insurance policies are not designed to cover all long-term care expenses. A. They typically focus on skilled care services provided by licensed healthcare professionals in a facility setting, though some plans may offer benefits for custodial care received at home. B. Custodial care assists with daily living activities like bathing, dressing, and eating. Premiums for long-term care insurance typically increase over time due to rising healthcare costs and the increased likelihood of needing long-term care as the policyholder ages. D. Question 100. An insurance agent working in Montana receives a call from a client who is concerned about the difference between an HMO, Health Maintenance Organization, and a PPO, Preferred Provider Organization, plan. The agent should explain that A. HMO plans require referrals from a primary care physician to see specialists, while PPO plans do not. B. HMO plans typically have a wider network of healthcare providers compared to PPO plans. C. PPO plans generally offer greater flexibility in choosing providers, but may come with higher out-of-pocket costs. D. Both HMO and PPO plans offer the same level of coverage for all medical services. The correct answer is A and C. HMO, Health Maintenance Organization, plans require referrals from a primary care physician, PCP, to see specialists. This approach encourages preventive care and coordination of services within the HMO network. A. HMO plans typically have a limited network of healthcare providers within their network. B. PPO, Preferred Provider Organization, plans offer more flexibility in choosing providers, including specialists outside the PPO network. However, using out-of-network providers in a PPO plan may result in higher out-of-pocket costs for the policyholder. C. HMO and PPO plans generally don't offer identical coverage for all medical services. The specific benefits and covered services can vary depending on the plan design. Question 101. An insurance agent in Montana is explaining accidental death benefits offered as riders on life insurance policies. The agent should clarify that these riders typically A. Double the death benefit payout if death is accidental. B. Pay an additional benefit only if death is accidental from specific causes, like vehicle accidents. C. Are automatically included on all life insurance policies sold in Montana. D. Have their own separate premium that is added to the base life insurance premium. The correct answer is D. Have their own separate premium that is added to the base life insurance premium. Accidental death benefit riders are optional add-ons to life insurance policies, not automatically included. C. These riders pay an additional benefit if death is accidental, but the definition of accidental can vary by policy. B. It may not cover all accidental causes and may exclude certain events like skydiving or extreme sports. Accidental death benefit riders typically come with an additional premium charged on top of the base life insurance premium to cover the increased benefit. D. The rider cost will depend on the amount of additional coverage chosen and the insured's age and health. Question 102. A consumer in Montana is interested in purchasing a disability income insurance policy. The agent should explain that most policies: A. Provide benefit payments until the policyholder reaches retirement age. B. Define a disability based solely on the inability to perform the policyholder's current occupation. C. D. Cover all income lost due to a disability, regardless of the cause. The correct answer is C. Have an elimination period before benefit payments begin following a disability. Disability income insurance policies typically replace a portion of the policyholder's income if they become disabled and are unable to work. Benefits are not guaranteed to continue until retirement age. A. Most policies define disability based on being unable to perform any gainful occupation *, not just the policyholder's current job. B. This means they consider if the insured can work in a different capacity with their limitations. Most disability income insurance plans have an elimination period *, which is a waiting period between the disability and when benefit payments begin. C. The elimination period can vary from 30 days to 1 year or more, depending on the policy design. Disability insurance policies typically don't cover all income lost due to a disability. D. They may have limitations on the benefit amount and may exclude certain causes of disability, like self-inflicted injuries. Question 103. An insurance agent working in Montana is contacted by a client who is nearing retirement and is considering an annuity. The agent should explain that annuities: A. Are a type of life insurance policy that pays out a death benefit to beneficiaries. B. Can offer guaranteed income payments for a set period or for the rest of the policyholder's life. C. Grow tax deferred within the annuity until withdrawals are made. D. All of the above. The correct answer is B and C. An annuity is not a type of life insurance. A. While some annuities may include a death benefit as an optional feature, their primary purpose is to provide income. Annuities can offer guaranteed income payments * for a specified period or even for the rest of the policyholder's lifetime. B. These payments are typically funded by a lump sum premium paid by the policyholder upfront. Annuity earnings can typically grow tax deferred within the annuity until withdrawals are made. C. This means taxes are not applied to the earnings until the money is withdrawn. However, there may be tax implications on withdrawals depending on how the annuity was funded. Question 104. A Montana resident is considering a Medicare Advantage Part C plan. The agent should explain that Medicare Advantage plans: A. Are fee-for-service plans offered directly by Medicare. B. Provide an alternative approach to traditional Medicare, Parts A and B, through private insurance companies. C. Cannot cover services not covered by original Medicare. D. Require enrollees to have a separate Medigap plan for additional coverage. The correct answer is B. Provide an alternative approach to traditional Medicare, Parts A and B, through private insurance companies. Medicare Advantage, Part C, plans are offered by private insurance companies as an alternative way to receive Medicare benefits. B. These plans are not fee-for-service plans administered directly by Medicare. A. They typically offer a coordinated network of healthcare providers and may cover some benefits not included in original Medicare, such as vision or dental care. C. However, Medicare Advantage plans may not be mandatory to have a Medigap plan. D. Medigap plans, also known as Medicare Supplement plans, are optional policies designed to work alongside original Medicare to help beneficiaries pay for out-of-pocket costs. Question 105. An insurance agent working in Montana receives a call from a client who wants to cancel their health insurance plan mid-term. The agent should advise the client that generally: A. Cancellation is permitted without any restrictions or fees. B. Cancellation rights may be limited except in certain qualifying events like job loss or moving out of state. C. The insurance company will always provide a full refund of any premiums paid. D. The client will likely be responsible for paying the premium for the entire policy period. The correct answer is B. Cancellation rights may be limited except in certain qualifying events like job loss or moving out of state. Canceling a health insurance plan midterm in Montana typically isn't allowed without any limitations or fees. A. Cancellation rights are usually restricted except for qualifying events defined by law or the specific health plan. These events may include job loss, losing coverage under a dependents plan, or moving out of the plan's service area. B. Full refunds of premiums are not guaranteed for midterm cancellations. C. Depending on the plan and the reason for cancellation, the policyholder may be responsible for a prorated premium for the coverage period. They may also face a cancellation fee. D. Question 106. A consumer in Montana is considering a variable universal life insurance policy. The agent should explain that the death benefit in a variable universal life insurance policy A. is a fixed amount that is guaranteed by the insurance company. B. can fluctuate based on the performance of the underlying investment options chosen by the policyholder. C. may have minimum premium payments required to maintain coverage. D. all of the above. The correct answer is B and C. Variable universal life insurance is a type of life insurance that offers more flexibility and investment choices than whole life insurance. The death benefit is not a fixed amount guaranteed by the insurance company. A. Instead, it can fluctuate based on the performance of the underlying investment options chosen by the policyholder. B. These investment options can vary from conservative to aggressive. Variable universal life insurance policies typically have minimum premium payments required to maintain coverage and avoid policy lapse. C. These minimum payments may not be sufficient to cover both the cost of insurance and the desired growth in the cash value. Question 107. A life insurance agent in Montana is meeting with a client who is interested in critical illness insurance riders. The agent should clarify that these riders typically A. pay a benefit only upon diagnosis of cancer, regardless of the type or severity. B. cover a defined list of critical illnesses, and the benefit amount may vary depending on the illness. C. are not subject to medical underwriting, so anyone can qualify for coverage. D. do not have a grace period for late premium payments before coverage lapses. The correct answer is B. cover a defined list of critical illnesses, and the benefit amount may vary depending on the illness. Critical illness insurance riders are not the same as cancer insurance. They typically cover a defined list of critical illnesses such as heart attack, stroke, or organ failure. B. The benefit amount may vary depending on the specific illness diagnosed. These riders do require medical underwriting to assess the applicant's health risk and determine eligibility and premium amounts. C. Most critical illness riders, like other insurance policies, have a grace period for late premium payments before coverage lapses. This grace period allows some flexibility for policyholders to catch up on missed payments. D. Question 108. A resident of Montana is considering a short-term health insurance plan. The agent should explain that these plans A. are intended to provide comprehensive health coverage for a person's entire lifetime. B. can be renewed indefinitely as long as premiums are paid on time. C. typically have lower premiums compared to comprehensive health insurance plans, but may have limited coverage. D. are a good option for individuals who are eligible for Medicare. The correct answer is C. typically have lower premiums compared to comprehensive health insurance plans, but may have limited coverage. Short-term health insurance plans are not designed to provide comprehensive health coverage for a lifetime. A. They typically offer temporary coverage, lasting for a period of less than 12 months, and cannot be renewed indefinitely. B. These plans may have lower premiums compared to comprehensive health plans but may have limitations in coverage for certain conditions or services. C. Short-term health plans are generally not a good option for individuals who are eligible for Medicare. D. As Medicare is a government-sponsored health insurance program for seniors. Question 109. An insurance agent working in Montana is contacted by a client who is confused about the difference between exclusions and limitations in a health insurance policy. The agent should explain that A. Exclusions are benefits that are covered by the plan, while limitations restrict the amount or frequency of a covered service. B. Limitations apply to all services covered by the plan, while exclusions are specific services that are not covered at all. C. Both exclusions and limitations can affect what is covered by the health insurance plan. D. Neither exclusions nor limitations impact the cost of the health insurance premium. The correct answer is C. Both exclusions and limitations can affect what is covered by the health insurance plan. Exclusions and limitations are both important factors to understand in a health insurance plan. C. They can significantly impact what healthcare services are covered and how much the policyholder may be responsible for out-of-pocket. Exclusions are specific services or conditions that the plan does not cover at all. For example, a plan might exclude coverage for cosmetic surgery or certain mental health treatments. Limitations apply to covered services. They restrict the amount, frequency, or dollar amount that the plan will pay for a particular service. An example of a limitation could be a plan that only covers a certain number of physical therapy sessions per year. Both exclusions and limitations can affect what healthcare costs the policyholder is responsible for. D. Understanding these terms is crucial when choosing a health insurance plan. Question 110. An insurance agent working in Montana is explaining long-term care insurance benefits to a client. The agent should clarify that most long-term care insurance policies A. Provide benefits regardless of whether the care is received at home, in a facility, or in the community. B. Only cover custodial care services that assist with daily living activities. C. Have a lifetime benefit pool that pays out until the funds are exhausted. D. Consider the policyholder's age and health status when determining premiums. The correct answer is D. Consider the policyholder's age and health status when determining premiums. Long-term care insurance benefits may vary depending on the specific plan design, but most do not cover all care settings. A. Some plans may cover home care, facility care, or both, with possible limitations. They typically focus on skilled care services provided by licensed professionals, but some plans may offer benefits for custodial care. B. Long-term care insurance policies don't necessarily have unlimited lifetime benefits. C. Instead, they may have a maximum benefit amount or a daily, monthly payout limit. Premiums for long-term care insurance are based on factors like the policyholder's age, health status, and the plan's benefits. D. Younger and healthier applicants typically qualify for lower premiums. Question 111. A consumer in Montana is interested in purchasing a disability income insurance policy. The agent should explain that these policies typically A. Pay benefits for any loss of income, regardless of the reason. B. Require proof of income loss before benefits are paid. C. Offer a partial disability benefit if the insured can still work part-time. D. All of the above. The correct answer is B and C. Disability income insurance policies are not designed to replace all income lost due to any reason. A. They typically focus on replacing income if the policyholder becomes disabled and is unable to work in their own occupation or any other occupation for which they are qualified. B. Many plans require proof of income loss before benefits are paid. Some disability income insurance plans offer partial disability benefits if the insured can still work part-time but their income is reduced. C. The benefit amount may be a percentage of the full benefit based on the loss of earnings. Question 112. An insurance agent working in Montana receives a call from a client who is considering a dental insurance plan. The agent should explain that dental insurance plans typically A. Cover the entire cost of all covered dental procedures. B. Use a fee-for-service model where the dentist bills the insurance company directly. C. Pay a portion of the cost for covered services, following a predetermined fee schedule. D. Require a referral from a primary care physician to see a dentist. The correct answer is C. Pay a portion of the cost for covered services, following a predetermined fee schedule. Dental insurance plans rarely cover the entire cost of all dental procedures. A. They typically follow a managed care approach where the policyholder uses dentists within the plan's network. These dentists may agree to accept reduced fees for covered services according to a predetermined fee schedule C. The plan will typically pay a portion of the allowed amount, and the policyholder may be responsible for the remaining balance, coinsurance, or a flat fee, copay, depending on the plan design. Dental insurance plans generally do not require referrals from a primary care physician to see a dentist in network D. However, they may require pre-approval for certain procedures. Question 113. A Montana resident is considering a cancer insurance policy. The agent should explain that these policies typically A. Provide a fixed payout upon diagnosis of any type of cancer. B. May offer different levels of coverage depending on the type and severity of the cancer. C. Can be used to pay for any expenses related to cancer treatment. D. Are considered major medical insurance and can satisfy the individual health insurance mandate. The correct answer is B. May offer different levels of coverage depending on the type and severity of the cancer. Cancer insurance is a specific type of limited benefit health insurance. It does not provide a fixed payout for any cancer diagnosis. A. These policies typically offer different coverage tiers depending on the type and severity of the diagnosed cancer. B. The benefit payout may vary depending on the specific policy provisions. Cancer insurance is not a substitute for major medical insurance. C. The benefits are typically intended to help cover out-of-pocket costs associated with cancer treatment, not all related expenses. Cancer insurance is not considered major medical coverage and does not satisfy the individual health insurance mandate in Montana. D. The mandate may have required certain individuals to have minimum essential health coverage, but the federal mandate is no longer in effect. Question 114. An insurance agent working in Montana is contacted by a client who wants to increase their life insurance coverage. There are several options available. Which option would likely not result in a change in premium amount? A. Converting an existing term life insurance policy to a whole life policy. B. Adding a guaranteed insurability rider to an existing term life policy. C. Increasing the death benefit on an existing whole life policy. D. Purchasing a new term life insurance policy with a longer term. The correct answer is A. Converting an existing term life insurance policy to a whole life policy. Here's a breakdown of the options and why they might affect the premium. Converting a term life policy to a whole life policy typically increases the premium because whole life builds cash value and offers permanent coverage. A. This is unlikely to result in no change in premium. Adding a guaranteed insurability rider allows the policyholder to purchase additional coverage in the future without additional medical underwriting, but it typically increases the premium for the base term life policy. B. Increasing the death benefit on an existing whole life policy will likely increase the premium because the insurer is on the hook for a larger payout. C. Purchasing a new term life policy with a longer term will likely increase the premium because longer terms are typically more expensive than shorter terms. D. Therefore, converting an existing term life policy to a whole life policy is the least likely option to result in no change in premium. Question 115. A consumer in Montana is interested in a vision insurance plan. The agent should explain that vision insurance plans typically A. Cover the entire cost of an annual eye exam and eyeglasses or contact lenses. B. Offer discounts on eye exams, eyeglasses, and contact lenses. C. May not cover the cost of corrective lenses, but may cover eyeglass frames. D. Require a referral from a primary care physician to see an ophthalmologist. The correct answer is B. Offer discounts on eye exams, eyeglasses, and contact lenses. Vision insurance plans rarely cover the entire cost of everything. A. They typically operate on a discount model. Policyholders use in-network providers who agree to provide services at reduced rates. B. The plan may offer a certain amount of coverage for eye exams, eyeglasses, or contact lenses, but the policyholder may still be responsible for some of the cost, copay or coinsurance. Vision insurance plans typically do not cover the cost of medical treatment of eye diseases. They generally do not require a referral from a primary care physician to see an ophthalmologist. D. Although some plans may require pre-approval for certain services. Question 116. An insurance agent in Montana is meeting with a young client who is applying for their first individual health insurance plan. The agent should explain that most health insurance plans A. Cover all pre-existing conditions without any limitations. B. May have exclusions for certain pre-existing conditions or have waiting periods before coverage applies. C. Offer guaranteed issue in Montana, meaning anyone can qualify for coverage regardless of health status. D. Require the same premium amount regardless of the applicant's age and health. The correct answer is B. May have exclusions for certain pre-existing conditions or have waiting periods before coverage applies. While there have been changes to healthcare access in recent years, most health insurance plans still do not cover all pre-existing conditions without limitations. A. They may exclude coverage for certain pre-existing conditions * or have waiting periods * before coverage applies to pre-existing conditions. These waiting periods can vary depending on the plan and the specific condition. Guaranteed issue is not always available. C. Montana may have specific rules about guaranteed issue plans, but generally, health insurers can consider an applicant's health history when setting rates. Premiums typically vary depending on the applicant's age and health status. D. Younger and healthier individuals typically qualify for lower premiums. Question 117. A resident of Montana is considering a high-deductible health plan, HDHP, with a health savings account, HSA. The agent should explain that HSAs A. Can be used to pay for health insurance premiums for any plan, regardless of deductible amount. B. Are subject to income tax on all contributions and withdrawals. C. Roll over unused funds each year, allowing the accumulation of savings for future medical expenses. D. Discontinue contributions and coverage cannot be restarted if the policyholder goes out of network for care. The correct answer is C. Roll over unused funds each year, allowing the accumulation of savings for future medical expenses. HSA contributions can only be used to pay for premiums for qualified high-deductible health plans, HDHPs, with certain minimum deductibles. A. HSAs offer tax advantages. Contributions may be tax-deductible *, and qualified withdrawals for medical expenses are generally not taxed *. B. Funds in an HSA can roll over unused each year *, allowing the policyholder to accumulate savings for future medical expenses. C. Losing coverage due to out-of-network care typically doesn't prevent restarting contributions and coverage in the future * as long as the plan remains an HSA-qualified HDHP. D. Question 118. An insurance agent working in Montana receives a call from a client who is confused about the difference between Medicare Part D and a Medicare Supplement plan, Medigap. The agent should explain that A. Medicare Part D covers hospitalization costs, while a Medigap plan covers prescription drugs. B. Both Medicare Part D and Medigap plans are offered directly by the federal government. C. A Medigap plan is required to have Medicare Part D coverage. D. Medigap plans typically help pay for out-of-pocket costs associated with original Medicare, Parts A and B. The correct answer is D. Medigap plans typically help pay for out-of-pocket costs associated with original Medicare, Parts A and B. Medicare Part D is a separate program for prescription drug coverage, A. It's not for hospitalization costs, which are generally covered by Medicare Part A. Medicare Part D and Medigap plans are not offered directly by the federal government, B. They are provided by private insurance companies. A Medigap plan is not required to have Medicare Part D coverage, C. These plans are optional and typically help pay for out-of-pocket costs associated with original Medicare, Parts A and B, such as deductibles, coinsurance, and copays, D. Question 119. An insurance agent working in Montana is explaining critical illness insurance to a client. The agent should clarify that benefits are typically paid A. Upon diagnosis of any illness, regardless of its severity. B. Only after the insured is unable to work for a specific period due to the critical illness. C. Following a defined recovery period after a critical illness diagnosis. D. As a lump sum payment directly to the insured. The correct answer is D. As a lump sum payment directly to the insured. Critical illness insurance benefits are not triggered by any illness, A. They are paid upon diagnosis of a specific critical illness * listed in the policy definition, B. The policy typically doesn't require a waiting period of disability * after diagnosis to qualify for benefits, C. Benefits in critical illness insurance are typically paid as a lump sum payment directly to the insured * D. This money can be used for any purpose, such as medical bills, lost income replacement, or other expenses. Question 120. A consumer in Montana is interested in purchasing a hospital indemnity insurance plan. The agent should explain that these plans typically A. Cover all hospital costs regardless of the reason for hospitalization. B. Pay a fixed daily benefit amount for each day the insured is hospitalized. C. Can be used as a supplement to a major medical health insurance plan. D. Are considered major medical insurance and can satisfy the individual health insurance mandate. The correct answer is B and C. Hospital indemnity plans do not cover all hospital costs, A. They typically pay a fixed daily benefit amount for each day the insured is hospitalized *, regardless of the actual charges, B. This benefit is intended to help offset some of the out-of-pocket expenses associated with a hospital stay. Hospital indemnity plans can be used as a supplement to a major medical health insurance plan * C to help cover any remaining costs after the major medical plan pays its share. Hospital indemnity insurance is not considered major medical coverage and does not satisfy the individual health insurance mandate * D.